This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
Have we achieved a soft landing? Has the Fed kind of done its job?
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Fears over a broader regional war in the Middle East.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Thank you for joining us across the nation. Paul, we're deep into 2025. Exhausted yet?
Oh, sure. Absolutely. I mean, we got the futures absolutely unchanged here in the morning here. Got a lot of economic data here we're going to get later on
And odd today because Thursday we're here, but
equity
the markets
are
open.
Closed,
yeah.
but we will be here. The bond markets had limited hours, but we will be here.
Today claims an ADP because essentially no economic data tomorrow. We're going to get to Liz Ann Saunders. Very importantly, Craig Moffett has agreed to join us. Really a yeoman's duty today. He's like on a flight or something, and he's going to come here. He has a sell rating on Apple. We'll speak to Mr. Moffett of MoffettNathanson. Iconic media work. We'll do that here. I'm guessing I'm eyeballing it 15 minutes. Liz Ann Saunders here in a moment. The news flow is extraordinary. I can't say enough how the surveillance team has worked all night to try to piece the show together. Rob Carolyn will join us at the bottom of the hour with the Vice Chairman of the Fed, Mr. Carolyn, on these horrific fires. No other way to put it out in L.A.
Yeah,
this time is different in Los Angeles.
Because it is downtown Los Angeles. I've got an offspring there, and he was sending me some video pretty close, but it is right downtown L.A. You can see it from pretty much everywhere in the city. So
Joe Vigliotti over at
there.
CBS with images recently of Malibu, and it's different. We'll give you a report on that here across the nation in 20 minutes as well. Let's get right to it from the Interactive Broker Studios, the Bloomberg Business Flash. Who else? Lisa Mateo.
You got him. We got a little movement in futures this morning. This is after yesterday's sharp decline in big tech. Saw the NASDAQ 100 log its worst day in weeks. We'll start with NASDAQ futures down about 14 points. Dow futures down about 9. S&P futures down about 4. We have the 2-year yield at 4.30%, up 1 basis point. The yield on the 10-year 4.70, and that's up 1 basis point. Yesterday, the 10-year yield settled at its highest since late April. The 30-year climbed to its highest level since November 2023. Over to currencies, we have the dollar rising for a second day. The Bloomberg Dollar Spot Index up about 0.4%. Nvidia, one of the biggest losers in yesterday's declines on Wall Street, dropping more than 6% this morning. Shares on the rebound, they're up about 1%. Now, words from its CEO Jensen Huang had a positive and negative effect on other companies. Samsung shares, they rose 3% in Hong Kong. That's after Huang said that he was confident of the company's ability to resolve some technical issues, producing a new type of memory chip for AI systems. But then you have quantum computing stocks falling because Huang said that very useful quantum computers are likely decades away. So, for example, quantum computing down 18% and D-Wave Quantum off 16%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Joining us now from Charles Schwab, Liz Ann Saunders, Chief Investment Strategist. Her first presidency on the Schwab watch was Barack Obama, so we're thrilled she could be with us today. I've got to go to the politics in Washington, the tariff announcement 45 minutes ago, according to CNN. Emergency acts will be placed for President-elect Trump. Liz Ann, how should our listeners and viewers on YouTube, how should they synthesize politics into the emotion of politics into their investment strategy?
Well, I would say try to keep the emotion out of it. It is more difficult when you bring politics into the mix, but we know emotionally based investment decision making doesn't tend to work well. I think there's lots of playbooks from which investors are tearing pages as it relates to Trump. I think maybe the most relevant one would be 2018, not necessarily in terms of tariffs broadly, because they were smaller in scale and a little bit more precise, but the method by which announcements on tariffs were made, often by social media. And I think early at this point, we're getting a sense that that is what we might see. And we know that that caused some short-term spikes in volatility broadly, but also specific to industries or segments of the economy that were impacted. Trying to trade around that in advance, I think, is a fool's errand. But that is what I think is likely to be a bit of a volatility driver this year, is the method by which we get information on some of these policy proposals.
Lizanne, equity investors just have come off 2 years of 20+ returns in the S&P 500. Sentiment, is sentiment too frothy right here as we start 2025?
You saw a little bit of the bloom come off the rose of frothy sentiment given the weakness in December, but absolutely, it's still on the high end of the spectrum. But as you guys know, we've talked about for years on this program, sentiment even at extremes, yes, all else equal, serves as a bit of a contrarian indicator. It also it typically requires some sort of catalyst. And as we learned from the late 1990s, sentiment can get very optimistic, then really frothy, then completely absurd. And that can go on for a period of years before something that, some sort of straw breaks the camel's back. So I'd be also really careful about trying to trade around sentiment conditions. I'd say the same thing about valuation. Valuation is very stretched right now, but there's a relationship there because valuation is more of an indicator of sentiment, and in turn represents a very poor shorter-term market timing tool. So I'd be careful in isolation of looking at sentiment as a negative, unless there is a negative catalyst.
Lizanne, it seems like the Fed is going to be more measured in rate cutting in 2025 than maybe the market was discounting even 6 months ago. That perhaps puts more pressure on earnings to come through for support for this market. How do you feel about earnings in 2025 for this market?
I think that is part of the reason why we've seen some weakness in the market. The expectation for calendar year 2025 earnings is about 14%, and that's predicated on profit margins being at around that same level. But the trend has been lower, at least in terms of earnings estimates. It has not been the case for profit margins. So we may be getting to a point where there's a realization that in order to actually hit that earnings growth consensus, it does require record or near record profit margins. Yeah. That's what I would pay close attention to during fourth quarter earnings season, is what the outlooks are from companies, particularly on that profit margin story.
Listen, I look at the market and I say to myself, okay, 2 years into a great bull market, I got to keep going. I got to be invested. But at the same time, I have to frame free cash flow. And that means I got to look at 30% of the stocks, not 100% of the stocks. How do you filter that through in active management to get to the successful 30% of stocks?
Well, free cash flow, I think, is a very important factor right now to focus on. It's been one that we've had top on our list, or near the top of our list in terms of factors in focus. I think the differential, not that the market thinks purely in calendar year terms, things don't completely reset on December 31st into January 1st, but I think the differential in 2025 from a factor perspective is maybe a shift from where level was more important in 2024, meaning strong versus weak, whether it's free cash flow, strength of balance sheet, interest coverage. Now I think it's rate of change that matters a little bit more, where you see that potential inflection point, improvement, better or worse mattering more than good or bad. And I think that applies to most quality factors, inclusive of cash.
Lizanne Saunders, thank you so much. Greatly, greatly appreciate it with Charles Schwab today. This is a joy to bring in folks. Craig Moffett has been one of the great supporters of the show going back many, many years. Iconic at Sanford Bernstein, and then Moffett and Nathanson. The good news is, Paul, is if Nathanson's on, I got to talk Yankees baseball.
Yep.
I don't have to do that with Craig Moffett. Right. Joining us now, adjusting his schedule, is Craig Moffett, who worldwide yesterday put a sell rating on Apple, guiding down 20%, 23%, who's counting. Let's start with a why, Craig Moffett. Why a sell on Apple?
How are you? Good to see you again. Look, this is really a valuation call, but look, the market overall is pretty frothy valuations. But Apple, even relative to the Mag 7 peer group, is now extremely stretched with a PEG ratio of around 3, where the rest of the Mag 7 trades with a PEG ratio of around 2. So there's this perceived safety in Apple. Wonderful franchise, very dedicated customers. But there is no safety when you're paying 33 times earnings for a company that's growing organically in the very low single digits, and even with buybacks, earnings are still growing at sort of half the rate of the rest of the Mag 7.
When I look at it, it's the idea of a sell rating, and that means a fractured free cash flow. Are you suggesting this will filter down in the mix of cash from operations, CapEx, and then finally free cash flow, where they're going to miss the mark?
No. I want to be clear. We're not saying Apple is a broken company. I want to come back to some very real risks that we should talk about. But Apple's not a broken company. It's a broken valuation, and there are, as I said, some significant concerns that ought to be reflected in a lower multiple, or at least a more sober multiple than what you've got right now. There was this narrative over the past couple of months, particularly into the last couple of weeks of last year in 24, where everyone was talking about the fact that Apple was, quote unquote, melting up in the face of no news. In fact, there was actually quite a bit of news, and it was bad, or at least sobering and concerning news. Obviously, the risk of retaliatory tariffs when we got a Trump administration, but more saliently, over the last couple of months, you've had the judge in the Google antitrust case say that the payments that Google makes to Apple for search, which, remember, that's 25% of Apple's operating income, are patently illegal. Now, we don't know how those will change, but there's obviously a risk that they do. That ought to be reflected in the multiple. And then there's real deterioration in China, and some obvious concerns that with China, the Chinese government is obviously not going to allow Western large language models to answer questions in China. So you're going to have Chinese partners. That's got to be contemplated with margins and all that sort of thing. So again, nothing says that Apple is broken. Although, one more thing, there are real concerns about whether AI is going to drive the kind of upgrade cycle that seems to be discounted in the stock.
Right.
We're pretty skeptical. But Apple's not broken. It's the valuation that's broken.
So, Craig, given that the valuation may not reflect some of the risk here, I want to go to the China risk here, because I think one of my concerns, I think the concerns from a lot of investors is this is a market that was seen as a growth driver for Apple, and maybe it's not going to be going forward given the improved competition, maybe the sense of nationalism in that country in terms of buying Chinese products. How do you view China as a risk factor to the Apple story?
That's absolutely right. Remember, Greater China is the second most important market for Apple, and you've had a couple of things happen since the big 5G upgrade cycle back in 21-ish. First, you had the real growth and empowerment, I suppose, of Huawei in China, where after the U.S. banned exports to China or chip exports and the like, and tried to limit Huawei and banned Huawei equipment in the United States, Huawei had to turn internally and actually has done quite well, developing quite credible products that are now driving a significant amount of Chinese market share. You've also got companies like Honor and what have you that have built a much more competitive handset market in China than what we've seen in the past. So it's simply not realistic to think that Apple is going to have the same kind of market share that it had in China. Yeah. And then the Chinese economy is soft, and so you've got relatively slow growth in China anyway. And then, as I mentioned before, you've got limitations on what China is going to, or what China is going to allow Apple to do with respect to AI.
So, Craig, we've seen Tim Cook go to China on several occasions, trying his best, given the importance of China to the Apple story. What's the risk to their supply chain, Apple's supply chain here, when we have a Trump administration coming in, which might suggest, just higher tensions between the two countries?
You're right. These kinds of risks are really hard to map out. Last time under the Trump administration, Apple was exempted. So remember, almost all of Apple's key components are imported and in large measure from China. Those imports were exempted, and I suspect they probably would be again this time. But you also have the risk of retaliatory tariffs that could be related to entirely separate products, automobiles or something. And in other countries where you have where Apple, as an ambassador of the U.S. and with a clear U.S. identity, could face real tariffs elsewhere in the world.
Right, Craig. We got time for one more question. It's so important. Comcast, you've got to buy in Comcast. It's back to a 2017 pricing. I mean, it's not doing a Warner Brothers Discovery, but it's moldy. What would you suggest to Brian Roberts that he needs to do to make a permanent force out of his Comcast?
Well, remember, Tom, you started that question by thinking about the media side of Comcast. And while the media side of Comcast is important, it is still the tail, and it shouldn't be wagging the dog. Comcast is primarily a cable infrastructure company. And they have actually a lot of advantages in cable infrastructure, not least that this convergence world that we're heading into really favors the cable operators because they can offer mobile everywhere that they offer broadband. The telephone companies can't come close to doing that. So I think the real story of Comcast is actually on the cable side, not on the media side.
Right. One of our interns made up the notes, Craig, for you on short notice. Thank you so much for joining. And they thought we were talking to Nathanson, so they said, ask him about the Yankees. Craig Moffett.
Hey, I'm a Jets fan, so if you want to talk misery, talk about the Jets with me.
I mean, it's painful to say the least. I mean, it's been clumsy. The Jets have been clumsy.
Brutal.
Yes. Craig, short notice on the way to the airport. Thank you so much for joining us today. His sell rating on Apple, that made global news yesterday for MoffettNathanson as well. We were green on the screen. CNN reporting that the president-elect will do some form of emergency tariffs. Markets turn, futures -13. With our news in New York City, Michael Buck.
Thank you very much, Tom, Paul, Lisa. We begin with wildfires in California. Tens of thousands are fleeing their homes as wildfires burn out of control in the Los Angeles area. Let's get the latest with Bloomberg's John Tucker.
Michael, it sounds like a freight train moving through. Mandatory evacuation orders have been expanded to parts of northern Santa Monica.
The wind is so strong it'll almost knock you over, and the embers are blowing through the parking lot, and the ashes will hit you in the eyes.
The Palisades fires burned almost 3,000 acres, with those strong winds hampering firefighting efforts. Here's California Governor Gavin Newsom.
Having just quite literally an hour or so ago gone up the canyon and saw firsthand the impact of these swirling winds and the embers and the number of structures that are destroyed, not a few, many structures already destroyed.
Governor Newsom declaring a state of emergency. Isolated wind gusts could be as strong as 100 miles per hour. The fires have prevented emergency vehicles from getting through, and on Sunset Boulevard, bulldozers were brought in to push abandoned cars to the side and create a path. Over 220,000 customers remain without power. I'm John Tucker, Bloomberg Radio.
Thank you very much, John. Former President Jimmy Carter will continue to lie in state after his remains arrived in Washington Tuesday. Carter will remain at the Capitol until tomorrow morning when he is transported to Washington National Cathedral for a state funeral. President-elect Donald Trump says he will not rule out the use of military force to seize control of the Panama Canal and Greenland, as he declared U.S. control of both to be vital to American national security. Trump repeating a criticism of former President Jimmy Carter concerning the Panama Canal.
He was a good man. I knew him a little bit, and he was a very fine person, but that was a big mistake. Giving the Panama Canal to Panama was a very big mistake.
Speaking to reporters before he takes office on January 20th, Trump also floated having Canada join the United States. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael, thanks so much. The news flow today, really extraordinary with claims and ADP coming up. But, Paul, we got to look at yield, which is what moved the market. Yesterday, the VIX out to 19.07. I got a 10-year real yield. I can't believe I'm quoting this, 2.31%.
Yep. Mortgage rates north of 7%. Tom,
to 8.
Yep.
We're not there yet.
No, but I mean, just moving higher here, so that's tough for the mortgage market. We got a steepening yield curve here, Tom. The 2-year Treasury's 4.30% to 10 years,
right?
4.72%. So 42 basis points steepening there.
And to me, there's a new calculus if we get CDs to go back up. CDs were 5-ish.
Yep.
And then, am I right? They came down.
Yep.
When you're in the triple leverage cash fund, folks, you don't care about CDs.
No.
CDs came down. Luke Kawa, thank you for that comment yesterday. It's at 11% net clean. You come down on a CD to 5% and you go down, and then you reverse and you go back up. What do?
Put some cash. I mean, just put some cash in that short-term paper there, Tom. I mean, why not? I mean, the 2-year Treasury is 4.3%, zero risk. The question is, what is that $7 trillion of cash on the sidelines? Where does that go?
On your morning commute today on Apple CarPlay, Android Auto, Sirius XM, we say good morning across the nation. All eyes to Los Angeles. Rob Carolyn to join us here in about 10 minutes. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR with Interactive Brokers Forecast Trader. You can trade your views on key political, economic, and climate indicators. Visit IBKR.com/forecast and get started today. All right, we've got futures falling. This is ahead of a rush of economic data with the closure of the markets tomorrow for the funeral of former President Jimmy Carter. The bond market will close early as well. Here's what you can expect today. 8:15 a.m. Wall Street time. Employment change numbers from ADP. That's followed by initial jobless claims about 15 minutes later. That all comes ahead of Friday's jobs report. 10 a.m. today, we'll get a read on wholesale inventories. And then later this afternoon, minutes from the Fed's most recent policy meeting. Let's get to futures. NASDAQ futures down 0.4%, 91 points. Dow futures down 0.1%, 82 points. S&P futures down 0.3%, or 19 points. The 2-year yield at 4.30%. That's up 1 basis point. The yield on the 10-year, 4.72%. That's up 3 basis points. The Bloomberg Dollar Spot Index up about 0.5%. Few stocks on the move this morning. Sana Biotechnology, it's up 241%. The company reported positive data from a study of its treatment of type 1 diabetes. Other stocks to watch. That's FanDuel owner Flutter, down nearly 2%. And this is after it cut its financial estimates for 2024. But it also said the NFL season saw the highest rate of favorites winning in nearly 20 years. Yes. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Is it predictable now? I don't buy it.
But it's better than
every
anything
weekend,
else. It's the best thing to bet.
I'm looking at fourth quarter NFL, and it's like a crapshoot every weekend.
It is.
Am I right?
No, but it's the best thing to bet. They're professionals. You kind of know what they're going to do more than a lot of other things.
Thank Michael Blumenthal. Richard Clarida is here, the vice chairman of the Fed, a prodigious economist associated with dynamic stochastic general equilibrium theory. We're not going there. People drive off the road. But we are thrilled that the former vice chairman is with us this morning. James Earl Carter, has to fill Michael Blumenthal's slot. He migrates the Fed chair over to Treasury Secretary and goes, now what? and he picked Paul Volcker. Where were you when he did that? And in '79, were you at Illinois at the time?
I was not. I had just graduated Illinois, and I think I was in my car driving out to Boston to start graduate school at
Did you
Harvard.
go Paul who?
Oh, no. He was already known, at least in macro circles then. But yeah.
It
was a big deal.
It was a huge deal.
Yeah. Historic.
The inflation worries we have now, and part of that is OMG back to the 60s, that we're going to get inflation, not like what Volcker faced, but a higher inflation. Do you buy it?
Oh, no. Ultimately, we're going to get the rate of inflation the Fed wants, and I think the Fed wants inflation around 2%. There's always shocks and noise, but that's where we're going to end up.
How are we going to get there? I mean, are they going to have to? I mean, it just feels like that inflation is kind of sticky around this level here. How do you think this is going to play out?
Well, I agree. In fact, if anything, the bumpy road analogy has proven to be a good one. Progress continued in 24, but slowed. I think we maybe discussed when I was on your show before, hearkening back to the 80s and so, what we could see is what we used to call opportunistic disinflation. That is, you do the heavy lifting, get inflation close to where you want it, so now say 2.5, but you basically wait till the next recession to cover that last mile. And so that's what we may see, inflation in the low to mid twos until the next downturn.
Are you forecasting a downturn anytime?
Oh, no. But remember, we haven't repealed the business cycle. So I think the unconditional chance of a recession is about 1 in 6. So at some point, we're going to have a recession.
April of 4 years, back when the Red Sox had a chance, Richard Clarida at the Fed, let me quote exactly, folks. Ooh. I mean, this is just what it's about. Sparta gets angry at me when I quote Latin.
Okay.
He's like, Tom, give it up. Clarida. Inflation that averages 2% over time represents an ex-ante aspiration of the FOMC, but not a time-inconsistent ex-post commitment.
Yeah.
You lost some of us there, old difference equation guy. What is a time-inconsistent ex-post commitment?
Well, yeah, I think that was probably Vice Chair Clarida channeling Professor Clarida. The basic point was that price stability means that expectations of inflation are anchored at a low number. So say 2%. There are always going to be shocks, oil shocks, whatever. Yeah. But you want people to expect over 5 years that inflation is going to be 2%. And so really, inflation targeting is really about targeting expected inflation. And so the basic idea there is if you want people to expect inflation is going to be 2, you want to try to keep it at 2 on average.
Okay, I'm going to go over to the new school of social research, Kyle Bronner and company. There's something new. It's called the debt in the deficit. Yeah. Are we losing our anchored ability with the debt in the deficit where it is?
Well, it makes the Fed's job a hell of a lot harder. There's no doubt about it. And I'm glad, Tom, that you mentioned both debt and deficit because they're both relevant. The deficit is how much we're borrowing every year going forward. The debt is how much we borrowed in the last 250 years, and that number is now north of 100% of GDP. And the last time we saw a number like that was in 1945 at the end of World War II. Indeed, Reinhardt and Rogoff wrote a book 10 years ago that said, usually when debt gets 100% of GDP, bad stuff happens, and so it will make the Fed's job harder for sure.
I've been on Wall Street since 1986. We've been talking about deficits and the debt since 1980, at least then. Is it ever going to come to roost? What will it be? We have an auction for United States Treasuries and nobody shows up?
Well, it's a great point because I started my career around the same time, also in Boston. So the boy has now cried wolf for 40 years. But back in those days, people were angsting about debt and deficits, but debt was 30% of GDP, not 100. Right. And so as the numbers get bigger, but the U.S. can kick this can down the road because we still are the global reserve currency. So it may take a while.
We welcome all of you across the nation. I just can't say enough about the schedule today. Thank you, Liz Ann Saunders and Craig Moffett, the former vice chairman of the Federal Reserve System, Richard Clarida of Columbia and PIMCO, with us this morning. Rob Carolyn will be with us. We're going to have an extended conversation with Dr. Clarida, and then Rob Carolyn will join us on the horrific fires out west. Richard Clarida, let's go back to Gertler and Clarida and the theory, the mathematics the complexities of DSGE. Yeah. You've had the courage to say, I'm thinking simpler now.
Oh, yeah.
Do we have an operative theory at the Eccles building if everyone's thinking simpler in the new humility?
Well, I don't think the Eccles building or now the Martin building can afford to be that theoretical. Indeed, my 4 years at the Fed really impressed upon me that there's a limit to how far theory can take you. It's a good place to start. I think all central banks, including the Fed, are trying to learn lessons about the inflation and the disinflation, and I think an appropriate level of humility is probably warranted right now.
The labor market, we're going to get some more labor market data today with initial jobs claims, and then on Friday with the non-farm payrolls. I don't know, 4.2%. That seems like a good labor market.
It's a great labor market. The unemployment rate right before the pandemic was running right around 3.94%. The unemployment rate now is historically low. Wage gains exceed inflation. It is a good labor market. The labor market clearly was overheating a couple of years ago, but it is a good labor market.
You just said it's a good labor market. I've heard you say it's a solid economy. Yeah. I got 82.8% of our listeners and viewers saying the vice chairman's nuts.
Okay.
And that it's a disaggregated economy. Well, and there's people out there, charge card debt, bankruptcies, people can't get jobs, et cetera. Rents coming down out west. How does a Fed prosecute a barbell America?
Well, okay, so I'm glad you gave me an entree here. So when I said it's a good labor market, you would rather be operating with a 4% unemployment than a 14% unemployment. But absolutely, Tom. Indeed, if anything, I think the last 5 years have impressed upon me how important it is, both for macroeconomists and thinking about the political economy of macro, to understand that there are haves and have-nots. And, if you own your home and if you own stocks, you've had a great 5 years. But 40% of Americans don't own. They rent and they don't own stocks. And for them, all of this talk about a great economy just seems like gibberish. So let me acknowledge the point.
30 seconds here just to finish the thought. Can a Fed prosecute one monetary policy for two John Edwards Americas?
Well, the Fed only has one tool, which is interest rates or jawboning about interest rates. And so what the Fed at best can do is it can keep the average rate of unemployment low and it can keep the average rate of inflation low. But the factors that we just discussed and even more factors are really beyond what monetary policy can address.
He's agreed to stay with us. Richard Clarida will be with us here coming up on an incredibly busy news day. I'm exhausted. It's January 8th? Are we
Here we go. Yeah, we got plenty of time.
It's like I feel like we're 3 months into 2025.
And earnings start next week, Tom, so you got to gear up for that.
Do you know that Greenland, north to south, is like from the North Dakota-Canada border, even farther down than Monterrey, Mexico?
Really?
You didn't know that.
I did not know that.
I didn't know that either. We'll talk central bank theory. The Federal Reserve Bank of Greenland. We'll do that with Richard Clarida coming up. We had green on the screen. The president-elect talking of tariffs. We have futures, -15 from New York City. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red on the screen, and this is as traders weigh concerns over U.S. tariffs coming when President-elect Donald Trump takes office. Right now, NASDAQ futures down 0.3%, 77 points. Dow futures down 0.1%, 72 points. S&P futures down 0.2%, or 15 points. We have the 2-year yield at 4.30%. That's up 1 basis point. The yield on the 10-year, 4.72%, and that's up 3 basis points. Shares of Shell, they're down 3%. It warned of significantly lower earnings in its gas division, also cut production guidance across its oil and gas units. Then meanwhile, ExxonMobil said it expects falling oil prices will to drag on fourth quarter earnings, while higher gas prices will provide a boost. Those shares off nearly 1%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. We're going to go to Rob Carolyn here. I really want to talk to him about the weather that is forcing these horrific fires in L.A. That'll mean a little bit shorter time, unfortunately, with the former vice chairman of the Fed, Richard Clarida. Paul wants to get to the adult conversation on tariffs, so I'll be the rude one. Can you serve at Treasury with Mr. Bessent? Have you made the trip to Mar-a-Lago?
No.
Are you under any consideration by the administration for your valued services?
I love doing what I'm doing, so the answer is no.
That's your cue, Paul.
That's my cue.
I was just putting the Clarida timeout chair.
I mean, Lisa Mateo's been reporting on more tariff news here coming from this president. It seems to be an economic policy tool that this incoming president really is going to rely upon. Can you give us your 2 cents on tariffs and kind of how we should think about them?
Okay, tariffs are complicated because they have multiple effects. One thing we know for sure, they do raise revenue. The other thing we know is they'll put upward pressure on the price of imports. How much is hard to estimate, depends on if companies absorb it in the margins. They can also invite retaliation, which also then influences our ability to export. And so it's really been a number of decades since we've had broad-based tariffs. I think you'd have to go back really to the early 1950s to look at levels of tariffs like some are talking about now. So pretty complicated, but we know for sure they raise revenue and they put upward pressure on prices.
Who do they raise revenue for? Do they raise revenue for the U.S. government?
Well, mechanically, because if you import something and you have to pay a tariff on it, that revenue, which is now roughly zero, will go up.
Okay. So, Claire didn't know this, but I was in the back of the classroom at Columbia.
Okay.
The curve went down when I showed up. This is way more complex than the media discusses. Yeah. And the answer is there's a thing called a deadweight loss in our tariffs price theory. Professor, describe what a deadweight loss is for our listeners and viewers.
Well, boy, that is Econ 101. That's the advanced question.
Paul Krugman caught up and said, ask him about deadweight loss.
Essentially, the revenue that the government raises is more than offset by the losses to consumers and producers relative to their ability to either consume goods or produce goods, and so that's the deadweight loss.
By definition, it's a lose game. That's the key thing.
But the important proviso that almost any tax that raises revenue generates some sort of a loss, whether or not it's a consumption tax or investment tax. Yeah.
But the heart of the matter here, to go to Krugman, is magnitude.
Oh, sure.
You can do. It's almost like negative interest rates. You can do tariff light. Doesn't matter. And what the president-elect wants is a magnitude of big tariffs. Is there a tip point where Trump's right and they work?
Well, again, it depends on how long they stay on. You know, one view is that you put tariffs on, countries basically then come to the negotiating table and then they come off. And so it's very importantly going to depend upon the detail of the tariffs, whether or not there's retaliation, and whether or not there is an end game. And really, without answering that, it's really hard to make an informed assessment.
One of the economic discussions over the last year or two has been U.S. exceptionalism vis-a-vis some of our large trading partners. Let's look at China here. Again, we had some more data about the China yields falling here. As a global economic advisor at PIMCO, what is your view of China here? How concerned should the world's economy be about the Chinese economy?
Well, I think, look, China is huge in terms of the size of the economy now. And importantly, there are some important and I think ongoing challenges, including the fact, you know, they've got the bursting of a big real estate bubble. They have a high unemployment rate among their youth, and of course the rest of the world, including the U.S. and Europe, is going to be more aggressive in terms of resisting a surge of China exports. And so near and long term, it's a challenging environment.
Paul Krugman with us on Friday. I'm told it's great to have him. To have Clarida and Krugman's what Bloomberg Surveillance is about. I have on my reading desk, I'm 2 chapters in, Ned Phelps' fabulous book summarizing his work. Explain why people should read Ned Phelps.
Well, Ned, my colleague and dear friend for 35 years, is literally one of the giants of economics, won the Nobel Prize, incredibly creative, along with Milton Friedman, essentially began to define modern macro, and also his work on growth and innovation and entrepreneurship, just a treasure and brilliant.
And so brilliant, he had a second career with dynamism and the enthusiasm of the economy. You heard it from Richard Clarida. Don't take it from me. I'll get Phelps' new book out on Twitter and LinkedIn. It's a jewel. He even mentions Clarida. He was a dean of the department. You got he gave Phelps his parking spot.
I should say, during my 4 years as chair, we had 3 Nobel laureates. So
here we
quite
go.
a nice run. Yeah.
This is what AEA's like. They sit at the bar and go, well, I had 3 Nobel laureates.
Phelps, Mundell, and then Stiglitz, and then Vickery before that. Yeah.
And you were not on speaking terms with any of them. That's
no,
great. We got to go and talk the fire. Richard Clarida, thank you so much with PIMCO. I have been up since 1 a.m. waiting to talk to Rob Carolyn. We are thrilled he will give us perspective. Rob, I don't want to talk the fire. I want to talk the Santa Ana winds, which go east to west. We're now back to where we were in 1957. Why are the Santa Ana winds different this time?
Well, because we've got a big ridge of high pressure sitting over the western United States, Tom. We've had a big trough in the east. That's what's been producing the cold weather in the central and eastern United States. So conditions have been maximized. The other issue now is we had a storm system develop in the southwestern part of the country. That caused the windy weather to develop in Southern California on Monday. And now there's a cold front dropping across the state that's attached to a low in the Pacific Northwest. So they are looking at very strong winds today, 40 to 60 mile an hour. They'll see 80 mile to 100 mile an hour gusts in the canyons this morning. It should start to diminish this afternoon. I think they're done with it tonight. And then we've got another pulse of Santa Ana winds in Southern California Thursday into Friday.
On YouTube right now, the images of the San Gabriel Mountains in Altadena, just north of Pasadena, as well. There are 3 major fires. Rob Carolyn, the Santa Ana winds have been there forever.
Yes.
Are they changed by climate change, or is that a separate debate from the weather of Rob Carolyn?
Well, it would be a separate debate, Tom. As you've mentioned, we've had issues with Santa Ana forever. You know, it's a climatological event that takes place. The big issue is because the California population is now up around 40 million, there are people living where they didn't live before. They're in areas that are at much higher risk for fire danger. We've seen that happen north of San Francisco. We've also seen that happen around the LA basin. So we've got more people living in a state that's prone to fires, and they're happening, and the winds are excessive.
Paul, we talked about this earlier. This is not Neil Young up Topanga Canyon with Mick Fleetwood. This is thousands of people living where they're not supposed to live.
Exactly. Hey, Rob, talk to us about just the moisture out there in California. How parched are they at this point?
They're pretty dry, Paul, and there's no rain in the forecast because we're in a weak La Nina pattern. All of the precipitation is staying to the north. It's been moving through the Pacific Northwest. We've gotten a little into Northern California, but not a lot across Southern California, nor do I see really any rain headed their way anytime soon.
Paul, get one more in here.
So what's kind of the forecast here, Rob, here? I mean, there doesn't seem to be any real relief.
Well, the good news is, Paul, the winds are going to diminish quite a bit. They'll drop off to 10 to 15 miles an hour after midnight tonight. That will make a big difference for the firefighters. They're not going to be having to put up with, gusts over 80 miles an hour. The next pulse is a little further south. It's more down towards the San Diego Mountains in San Diego, and those winds will peak probably at 40 to 60 miles an hour Thursday into Friday. So not quite as strong in this event and in a different area of the state.
Rob's coming back with us here later on Bloomberg Surveillance this morning. Rob Carolyn, as always, just magisterial, great, clear thinking on these crises. Paul, I was up most of the night on this, and this is not like the others. This is what I get is this is different.
Yeah, well, what I get is it's just right there, like almost downtown. I mean, there's no real
Palisades fire almost
Everywhere.
made it through Santa Monica to Brentwood.
Yeah.
I don't know Brentwood. I mean, I looked at a house there once. It was like outside the garage, just to the right. It was $10 million just off the garage.
Exactly right.
But it's like fancy. It's like fancy LA.
Yeah. Oh, sure.
Yeah.
Yeah. I've seen a lot of actors post some video here.
Rob Carolyn with us here coming up later. On YouTube, stay with us. Bloomberg Surveillance.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
The Lisa Mateo Hour, hugely anticipated. We go to Lisa Mateo now for the newspapers. What do you see?
All right, so last night, the kickoff to the new high-tech golf league, TGL. You've been hearing all about it,
here.
Right? In the sports
No
report.
interest.
Oh, you have to, because this is the future, okay? So Tiger Woods, Rory McIlroy, they envisioned it for years, right? Finally kicked off 15-hole match, under 2 hours to complete, okay? So that's the thing there.
Is there a clock?
There's not. You know what? That's a good question if there is a clock. But it did go under 2 hours.
Are they quivering at Augusta, oh wise one?
No, they actually, though, in the traps, in the bunkers, they use the sand from Augusta National.
Isn't that cool?
Yeah,
That is pretty cool.
It's a made-for-TV thing. It's to bring in the younger demos, the younger kids.
Yes.
I did not see
Your
it.
thoughts?
It's fine. It's fine. It's just trying to make golf more fun, more accessible to more people. Take it out of the stodgy country clubs. Let's make it a little bit more like a man cave that a lot of guys are just,
Is it Top Golf?
It's something like that.
Kinda, because it's like a
Top Golf.
simulation.
Wait. Lisa, have you done Top Golf?
I have. I love it. It's so much fun because you have food and drinks and you just go crazy.
Like you're doing the tees with a margarita in your hand?
Yeah, but in Top Golf, though, you're actually hitting into the rate. This one is more like video screen, like a simulation, too, for this one. So that's the thing behind it. But
I'm not getting a lot of love
party.
over here, Paul. You're not like...
No, it's not for me, but it's
not
hopefully
for you.
it's
Next.
for
Well,
others.
DJ Khaled was there. They had music, DJ, people
Again, not for me.
chanting, screaming. It's a big party.
Next.
But you're right, next generation. So ultra-processed foods, are they really bad for us? Okay, this is a question a lot of people are asking. There was a study out, the Wall Street Journal pointed to it, and it said eating packaged foods doesn't automatically result in overeating or weight gain as long as you stick to foods that are low in calories per gram, don't have these certain combinations of fat, salt, carbs, and sugar. So let me give you an example of what you can do, Tom. You can avoid foods that clock in at 2 calories per gram or more, like frozen meatballs. There you go. Stick to those at around 1 calorie per gram, like low-fat flavored yogurt.
Okay, but just...
See, as she has a smile on her face because
She's laughing at us. You
I
should
know,
see
I
her
know.
breakfast, folks. It's like 1,200. It's like 200 calories. Isn't it about, okay, you can cheat on this, but you got to have wicked small portions?
Smaller portions, yes, that is key. But moderation, like if you do have these ultra-processed foods.
Cracker Barrel does not believe in small portions.
No, they do not.
I'm reading David McCullough on Paris right now. In 1830, the Americans were complaining about the small portions in Paris. Nothing's changed, right?
No, yeah, they do have tiny portions.
Look, we watch it's like Goodbye Columbus. They're at the dining room table, and Jack Klugman's going, "You eat like a bird, Lisa. You eat like a bird." Next.
Okay, Tom, I have another social media platform to you to join. Okay, ready? It is Blue Sky. Okay, so it's not really new. It started in It was an extension of in X, an internal project, but it launched about a year ago. But sources telling Business Insider it's in the final stages, raising new funding led by Bain Capital Ventures. Could value the company at around $700 million. So could give X some competition, who knows? But it's really been on the rise. It grew from 25.9 million users in 2024, and it started about a year ago. So it went from 3 million to 29 million.
I mean, people are looking for alternatives to X, but I mean,
yes.
We'll see. It's still out there, and nobody really cares if it's profitable anymore or anything, because it's Elon Musk.
They don't sell ads.
From where I sit, X has actually picked up breaking news momentum. The reality at 1 a.m. last night is I'm watching Los Angeles Scanner on Twitter, and I'm watching it with all the fire people in that. And it's some guy in his house on Twitter telling you exactly what's going on street by street.
They become the
This
journalists.
bad mouth on Twitter, I don't get. I see everybody using it. Next.
Okay, last one. That big casino complex in Manhattan's Hudson Yards, they were pitching it $12 million. Well, actually got shot down by Community Board 4. So that's a big black eye to it. It had this 80-story tower, wanted to bring all this casino to the Hudson Yards area. The members are saying, you know what? It's just a nightmare. It's going to bring traffic, emission problems, but the vote still has to go to the city council to sign off. So there's
Thank
still
you
more
for not doing congestion pricing today.
You're welcome.
It was congestion free.
Yes.
Very good. Lisa Mateo, thank you so much. The newspapers this morning. What a great, this show this morning's been on fire. Liz Ann Saunders on early.
Yeah.
She was great.
I know.
She has a rider in an agreement with us. We've got to play Zeppelin the entire show to get her to come on. Good morning, Liz Ann.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo, crushing news flow today. Thank you, Rob Carroll on the fires. He will join us in 59 minutes as well with an update. Is LA awakes to these horrific 3 fires? But the real issue, Paul, in the markets is I got higher yields, and I have economic data today because of President Carter's funeral tomorrow.
We do. We're going to get some ADP employment data, initial jobless claims, continuing claims. So we'll get some jobless numbers here today. Then, of course, Friday for the change in non-farm payrolls. The consensus there is 163,000. That'll be down from last month at 227,000.
You know, it's going to be interesting to see Ian Lingan at BMO Capital Markets publishing moments ago. And, you know, it's also notable that the bearishness that characterized much of December and is extended into the New Year's has occurred as a relatively steady drift towards higher yields. I'm just reading that note right now, about seconds ago. We'll summarize Ian Lingan here in a moment. Hugely respected on Wall Street. Let's do this on the day count. Let's get right to Lisa Mateo now from the Interactive Brokers studio, the Bloomberg Business Flash. Lisa.
Yeah, we've got little movement in futures. This is after yesterday's sharp decline in big tech. Saw the NASDAQ 100 log its worst day in weeks. We'll start with NASDAQ futures down about 21 points, Dow futures down 24, S&P futures down 4. We have the 2-year yield at 4.29%. That's little change, and the yield on the 10-year 4.70%, and that's up 1 basis point. Yesterday, 10-year yield settled at the highest since late April. Over to currencies, the dollar rising for a second day right now. The Bloomberg Dollar Spot Index up about 0.4%. You have shares of NVIDIA on the rebound. They're up nearly 1%. It dropped more than 6% yesterday. And words from its CEO, Jensen Huang, well, they're having a positive and also a negative effect on other companies. We'll start with Samsung. Its shares up 3% in Hong Kong, and this is after Wang said he was confident in the company's ability to resolve these technical issues that were producing a new type of memory chip for AI systems. But then on the flip side, quantum computing stocks falling because Wang said that, quote, very useful quantum computers likely decades away. So quantum computing down 17% and D-Wave Quantum off about 25%. That is your Bloomberg Business Flash. Tom and Paul.
What do you think? Ludlow did great yesterday.
He did.
I mean, he was out there, and they moved the market with the interview. What I need to know, I'm going to do this out on Twitter in a moment.
Okay.
Do I need a black leather jacket?
Oh yeah.
I mean, you
talk
think?
to Matt Miller. Matt Miller's your guy.
Is he the guy that can do it?
He's the jacket guy.
I'm looking at the Death Star this morning. The lovely Becky Quick is styling the Jensen Huang look.
Yep.
I mean, I think it's the new thing, Paul. You and me, black leather.
I
Lisa, come on. You want 5 black leather jackets in the closet?
6. We have to do it tomorrow.
We have to do it tomorrow. We'll do all black leather jackets. Thank you, Becky Quick, for styling Jensen this morning. Futures at -3. There's lots going on here. Let me say thank you to Cohn Resnick. We need to do that because they're a foundational supporter of what we do in economics. Bloomberg Surveillance, brought to you by Cohn Resnick Advisory, assurance tax with potential changes on the horizon. Well, you need to rethink your tax strategy. Cohn Resnick Tax Advisors can help keep your business at the forefront. Thank you, Cohn Resnick, for your support this morning. Greg Daco with us. And I think we can try to have a normal conversation about our abnormal economics as well. What have you rewritten your 2025 outlook? We're deep into the year.
Yeah, we are deep into the year, and it seems like every time there is something new that comes on the horizon that changes the outlook. But I think one of the key themes that will remain in place for 2025 is the fact that we'll continue to see U.S. exceptionalism. That means two things. That means that the U.S. continues to drag the world in terms of growth, but it also means that we have a stronger dollar. And a stronger dollar can represent some issues for emerging markets in terms of inflationary pressures and capital flows.
I'm all over this. To me, equities, bonds, currencies, commodities. I'm sorry, folks. FX is front and center right now.
It is.
When you look at your Bloomberg at EY Parthenon, when you look at the Bloomberg, how do you look at FX? Do you just look at DXY, or do you go further?
No, you have to look at the different bilateral currencies and how they're evolving. And I think that's going to be a key theme again in terms of 2025, because in a world where you have governments that are implementing policies to protect their industries, to focus on national security, you're going to see the bilateral flows be affected quite significantly, with some economies allowing for currency depreciation, like China, for instance,
Bob Sidge
to offset those
yesterday.
tariffs.
Bob Sidge is like, he's running a goalie camp up in Connecticut or something. He goes, did you look at dollar Greenland?
Oh,
Do you know what it's called?
No.
It's called the Nook.
The Nook?
It's the capital.
Oh, I see. Okay.
You look at Nookie.
Okay.
That's what I'm looking at on dollar Greenland.
Dollar Greenland. Greg, we have a president-elect that's going to be coming in, and one of his key economic policies appears to be tariffs.
Yeah.
How do you think about tariffs as just an economist?
I mean, I think in general, it was quite instrumental to hear what Rich Clarida had to say just a few minutes ago. But tariffs are going to hurt global growth on a broad basis, because if everybody raises their trade barriers, the cost of trade increases. That puts upward pressure on inflation and downward pressure on economic output. And that comes on the backdrop of what I've called a supply-fragile environment. What does that mean? It means that we're increasingly, post-COVID, in an environment where supply conditions are what's driving economic activity. In the past 40 years, it was really demand that was driving economic activity. Increasingly, it's supply factors: capital supply, labor supply, trade. Those are the factors that influence output and that influence economic activity and inflation, and that in turn force central bankers to react in ways that we're not necessarily used to.
This is the single smartest comment I've heard on tariffs. That's even smarter than Clarida. Don't let him know that.
Don't tell him.
This is really important, folks, the partition between demand dynamics. Orzag's been brilliant on this. Demand, 3, 2, 1. Demand dynamics, Paul, or supply dynamics. Tariffs aren't the same now.
No. So, did you change your economic outlook in the days following the U.S. elections?
We adjusted our outlook, yes, because there was likely to be a change in terms of regulation policy, in terms of immigration policy, in terms of tax policy, in terms of trade policy. Those are going to be the 4 factors that are going to lead to U.S. exceptionalism, not just meaning U.S. growth is stronger than its peers, but the U.S. is going to be a growth disruptor in 2025, 2026. And that has an influence not just on the U.S. economy, but on all trading partners. And I think we have to understand the nuances of the different policies that could be put in place. Tariffs are certainly going to be hurtful in terms of growth and in terms of inflation. Tax cuts are not necessarily going to be tax cuts. We're talking about an extension of the Tax Cuts and Jobs Act, not necessarily as stimulative as an actual tax cut. It's preventing a potential fiscal contraction that what we're seeing. So those are important dynamics to keep in mind.
So does that argue for a consistently stronger U.S. dollar?
I think consistently stronger. Whether it strengthens or not is an open question, but I think the strength in the dollar is here to stay for 2 reasons. 1, U.S. growth is likely to outpace most of its peers. 2, U.S. policy in terms of monetary policy is likely to remain tighter than most of its peers. The ECB, the Bank of Canada, the Bank of England, and most smaller central banks across advanced economies have eased monetary policy faster than the Fed. That leads to a stronger U.S. dollar, all else equal.
You have the advantage, I love this, ready? Ernst & Winnie. That's how far back
That's how far back I go, yeah.
You have the advantage of Ernst & Winnie, Ernst & Arthur Young, EY Parthenon as well. What are you hearing from the many business contacts of Ernst & Young?
That's one of the many advantages of working at EY.
It's a big advantage.
You talk to a lot of CEOs, CFOs across many different industries.
What's the secret theme here? Nobody's listening. Just tell us.
Well, you know what's most important and what I found most valuable is what's happening on the labor market front. We have the value of talent that has shifted dramatically, and CEOs and CFOs that struggled so hard to retain their talent and train that talent are not going to fire without regard. And that's what you're seeing in the labor market data. It's a very hard labor market to read, but if you look at the hiring rate that we had yesterday in the JOLTS report, lowest in a decade. Quits rate, lowest in a decade. What does that tell me? It tells me that the labor market is frozen in place. That means that we're not seeing broad-based layoffs, but we're not seeing broad-based hiring either. It is a risk because that balance is not stable. We could either see deceleration in hiring further, which would slow the economy, slow income growth, and slow consumer spending, or we could see more confidence on the back of potentially some pro-business policies put in by the administration that could stimulate employment. This balance is not stable.
One final question, really important. This jobs report Friday.
Yes.
Can it change the Fed, like an unemployment rate that ticks up 1 tick or 2 ticks? Is it like, not as a snooze fest, it never is, but are you looking for a wallop here that changes an ex post Fed?
Yes, I think in this world where the Fed is extremely reactionary, any report can actually shift how the market interprets the Fed will react.
Are you looking for revisions?
That's an issue. Yes, there are always revisions, especially when you get these major shocks,
he talking to?
Like the port strikes or the hurricanes.
They're all
right,
asleep
Tom?
in the control room. Did you see that?
But I think, yes, I think that's one of the big issues with the Fed right now is that if you look back at the past 6 months, July, no rate cut. September, jumbo rate cut. November, gradualism. December, we're revising down our assumptions in terms of rate cuts for 2025. Very reactive. And so I think these reports will be highly influential in terms of...
This is the question we're asking everybody. Lindsay Newman wants to know. She's with us next, folks. Greg Dacko, have you been to Greenland?
I have not been to Greenland.
We're waiting to get Iceland, a guest who's been to Greenland.
That's what everybody says. I've been to Iceland, not Greenland. Right.
Close enough. I've flown over multiple times.
Okay, very good. That's Greg Dacko. Thank you so much with EY Parthenon. They're just really, really valuable. And this jobs report Friday, I don't have an opinion, but my radar's up a little bit. That gets us to Lindsay Newman. I really can't say enough about her perspective here. She's with G0 Media, and they're out with their top 10 risks, and sort of pretty grim about it. It's like a G0 world, and he's looking at it as a jungle here. Lindsay, sure. Have you been reading in on Greenland and Panama?
Absolutely, Tom. Who has? And I have to say, I've been to Panama. I have not been to Greenland, certainly flown over Greenland, living here in London. Look, what we heard yesterday from the president-elect Trump is really what strikes me most, Tom and Paul, is this is not an isolationist story, right? If we think about the first term of President Trump, the Make America Great Again, America First, it was really about bringing jobs and manufacturing back to America. There was a concern about the U.S. turning inward. When we see him yesterday talking about perhaps annexing Canada, making it the 51st state, taking back the Panama Canal, his ambitions for Greenland. This is a very different set of aspirations that he has for his second term foreign policy approach.
You've got in your top 10 risks, first of all, Ian Bremmer's doing the hoodie thing now. I mean, he's really,
right.
He's really cutting a cash look there. I looked Lindsay Newman. The idea of the rule of Don is one of your risks. Is this a different Donald Trump this time around versus 8 years ago?
This is a Donald Trump who is facing down the prospects of one more term in office. And what we really see from him is he is different. His approach, not just his approach, but also his perspective is vastly different than what has come before him. If we take the nearest example of that, of course, is President Biden. And we know that administration was really about consensus building, negotiations, almost to a fault. So how many envoys did we see, if we take the Middle East theater, how many envoys did we see fly back and forth, Bill Burns back and forth, Anthony Blinken back and forth, to almost to no avail. We're still in the middle of the conflict. The hostages are not home. And with Trump, he's taking a very different approach, right? The approach is, let me scan the landscape. Let me look for the points of tension. Let me look and see how the U.S. may be disadvantaged. What are the interests that the U.S. Wants to pursue? And what are the levers that the administration can pull to create forcing functions and advance Trump and Trump's administration's ambitions? And we saw yesterday, and your last guest was just talking about this, we know a couple of those already. Of course, it's going to be tariffs. He sees that as the solution, not just for the trade discrepancies, but he sees it as a solution for how he could perhaps pursue those ambitions with Greenland. And it's also what also came through very clearly yesterday was about energy policy. The differences in energy policy. He's saying, we're going to drill day one. He went on and on about those 625 million acres that Biden has just recently taken offline. That obviously irked President-elect Trump quite clearly. So energy policy is another lever that he's going to be pulling.
Paul, I'm exhausted too.
Yeah, it's exactly. So, Lindsay, how do you think our big trading partners are going to interact and deal with President-elect Trump over the next 4 years?
Yeah, it's a great question. I mean, you're saying, Tom, that you're already exhausted. Paul, you're asking how Europe is going to deal with it. This is actually the calm before the storm, I hate to tell you. And it's been a stormy week for Europe. If you look at what Elon Musk has been saying on X, on that platform, we know, I've been writing in my columns for G0 that, Europe and Trump's allies, the U.S.'s historical allies, they're already packing their go bags. They're thinking about this. How are they going to be prepared? We see, for example, defensive spend is now no longer 2% is not the target. Right. Trump himself said yesterday 5%. That's going to raise some eyebrows in Europe today. But they're looking to be more flexible on defensive spend. Zelensky says he's willing to sit down. Putin has said he's willing to sit down. So everybody's looking to be to know what it is to be in Trump world.
Okay, you got the top 10 risks out. And folks, we're going to, instead of doing this in one interview, which I've told Ian I'll never do, we're going to spread it out over January. We're thrilled that Lindsay Newman can be with us from G0 Media. And, Lindsay, I look what Ian said to CBS. He said it's Trump's way or the highway. What does Secretary of State Rubio do with it's Trump's way or the highway?
Well, we know that Ian is absolutely correct there. He's put in place, Trump has put in place a cabinet around him, or his ambition is to put together this cabinet around him that they all know, Rubio knows that the buck stops with Trump. So Rubio has his ambitions. He has his sort of hardline ways with China, his hawkishness on China, which does dovetail nicely with what Trump is after. But ultimately, it will be Trump's policy, and those around him, like Rubio, know that.
Fascinating. I just, which of the top 10 risks, Lindsay, are you really focused on? Which is I haven't even read the entire document yet, but which is the top risk for Lindsay Newman?
Yeah, well, I will absolutely say that Ian's view of the world and Eurasia Group's view of the world around the G0 winning, which just means that the world is in a point of geopolitical recession. That is the lens through which Eurasia Group is seeing all of those other related risks. And that is sort of a thread line of the world in disorder, the multilateral institutions no longer having that same level of buy-in, the U.S. sort of retrenching and retreating from its role as global guardian. That is the top risk for Eurasia Group. And I would also throw my hat in, and it's tied to Greenland. These issues of ungoverned spaces. I mean, why is Trump so interested in Greenland? He's now saying because of national security, because of its placement in the world. It's the bridge to the Arctic. And we know these ideas like ungoverned spaces, both in sea and in actual space, will be increasing geopolitical risk for the years and decades ahead.
This has been brilliant. Lindsay, when you figure out what the new Washington consensus is, let me know. Lindsay Newman with G0 Media, and this begins really a whole January of talking about Eurasia Group's top risks for 2025. Can't say enough about the work of Dr. Bremer. Futures improve, a little bit red, -9. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. We're going to get to the wildfires in Los Angeles in a second, but breaking news. President-elect Donald Trump wants to take his hush money sentencing fight to the U.S. Supreme Court. Trump has asked the Supreme Court to halt the January 10th hush money sentencing. Now on to the wind-driven wildfires throughout the mountains near Los Angeles. They have forced tens of thousands of people to evacuate their homes. To make matters worse, firefighting aircraft have been forced to stay on the ground due to the high winds. Although his family evacuated, this man decided to stay and water down their home with a garden hose.
I'm so scared. My family, everybody left already, so I'm just here, but just, trying to be calm.
California Governor Gavin Newsom.
And the fact that people were still not evacuated, still did not heed the warning, were just coming down the canyon, is a reminder of how serious this moment is and how important it is you listen to these evacuation orders.
Former President Jimmy Carter continues to lie in state at the Capitol Rotunda ahead of his state funeral. Bonds selling off and U.S. equity futures slid as traders weighed concerns over U.S. tariffs coming when President-elect Donald Trump takes office. Futures erased gains following a report from CNN that Trump is considering declaring a national economic emergency to push through his tariffs plan. And again, breaking news, President-elect Donald Trump wants to take his hush money sentencing fight to the U.S. Supreme Court. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul, you were out signing autographs. Glad you were doing that. And, I'm sorry, the news flow is overwhelming.
Nonstop. Well, here we go. We've seen this before, Tom, so this is just the beginning. As Lindsay Newman was just saying, this is just the beginning.
It's going to be, it's going to be interesting to say the least. We're efforting Patricia Hurtado, who's encyclopedic on this, in Lower Manhattan and Brooklyn at the federal court in Manhattan. We'll see if we can get her in a crushingly busy morning for Patricia Hurtado. Across the nation on your commute, and thank you, Kevin Gordon, for comments on his Los Angeles, his Pepperdine as well. From an early morning Los Angeles with 3 uncontained fires across the nation on Apple CarPlay and Android. Good morning, Washington and Boston. And out on YouTube, subscribe to Bloomberg Podcasts. It's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we got futures. Well, little change. This is ahead of a rush of more economic data with the closure of the markets tomorrow for the funeral of President Jimmy Carter. The bond market will close early. We already have some data coming in. Employment change numbers from ADP for December. Expectation was for 140,000, came in lower, rising 122,000. The prior was for 146,000. Just a few moments. Initial jobless claims. This all comes ahead of Friday's jobs report. Also, some housing info. U.S. mortgage rates rose to 6.99%. That is a 6-month high. Home purchase applications fell to the lowest level since February. That's according to the MBA. And we're not done yet. Later today, wholesale inventories, consumer credit, as well as minutes from the Fed's most recent policy meeting. So we have NASDAQ futures up about 10 points. Dow futures up 5. S&P futures up 1. The 2-year yield at 4.27%, down 1 basis point, and the year yield on the 10-year 4.69%, and that is little change. Apple in the headlines. The sale of the iPhone 16s, well, they'll remain banned in Indonesia. This is after the country said its $1 billion plan, well, still not enough. And Microsoft plans company-wide job cuts soon. That's according to Business Insider. And finally, JP Morgan Chase ending its hybrid work option, getting ready, all employees returning 5 days a week. For on-demand news 24 hours a day, subscribe to Bloomberg whenever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business.
Head of HR at JP Morgan, Sam Rowe, was out saying it's great. 5 days a week plus the 2 days you can work remote the other 2 days.
2 days, exactly.
I mean, it's right. We're right back, Paul, to where we were.
Right back. We'll see how many other companies follow. Financial services companies follow. I mean, Citi is still on a 3-day a week.
Really, I didn't know.
And they use that. As Jane Fraser says, they use that as a kind of to attract talent. Attract and retain talent.
I'm ambivalent on this. Nicholas Booth at Stanford is heated that work from home's working. But I'm not getting that love from senior officers.
Well, I think it worked in terms of productivity. I'm shocked how well it has worked, but you do lose a lot of the in-office
Eric
stuff.
Stein going, oh, God, don't ask me about this. Joining us now from Voya. What a team. Barbara Reinhardt and Eric Stein, really, they've done great work in a bull market. CIO fixed income at Voya Investment Management. I got to ask, are you guys doing 5 days work from home?
So we vary by office. So I oversee all of our investment teams, and some of the teams are in 5 days a week, and some are in 3, and some are in 4.
Who's making that decision? Fancy guys or the people?
No, the team leaders, all the different CIOs and heads of the teams that report into me. You have to be in a minimum of 3 days, but you can be in 4 or 5. And I'm more of a believer more in is better than less. There's always different circumstances, but like. To me, to develop junior talent, to have a sense of team and cohesion in the office is better than not in the office.
What are you telling the junior talent right now about new bond market volatility?
Well, now they're getting to see the new bond market
They've
volatility.
never seen this before.
They haven't. Maybe a little bit in 2022, but it's to me, if you think of what happened in the fourth quarter and now beginning of 2025, up 100 basis points. Who would have thought that? So now that we're 12 days from the inauguration, every tweet's going to move the market.
Are you surprised that yields have risen in the face of the Fed cutting rates?
So look, the Fed controls the front end, but the back end is the market, is the macroeconomy, is inflation. And even though the Fed has cut rates, expectations of future Fed cuts have certainly been priced out for 2025. And so, we're not even pricing one cut until July or even after that. And so it's both, I think, a combination of the market's pricing in less Fed cuts, but also the economy's been stronger. And then inflation, it really depends on the inflation outcome, which obviously has a tariff impact as well.
So did you and your team at Voya, did you change your outlook for markets in the days after the election?
Yeah, look, generally we try to take a long-term approach. So I wouldn't say it was a massive change after the election, but certainly I think we are in for a period of more volatility. We've seen that in the beginning of 2025. Even though when the election happened, it was obviously the result of the election people were focused on. But I think even after the election to the end of 2024 into the beginning of this year, it's really all about policies. What do we get supply side, deregulation, kind of the good stuff first? That could be quite benign for markets or strong for markets, or do we get a lot of the tariff volatility, which could be weak? So it's really all about the timing of the policy implementation and exactly what the policies are.
Credit risk. How much credit risk are you taking out there? And given that you can get pretty nice yields on just governments.
Yeah, so it is. Look, given the rally we saw in spreads in both 2023 and in 2024, there is less spread out there in fixed income. There's certainly parts of the securitized market that offer a little bit, but we don't have historically wide spreads in a lot of the traditional fixed income sectors. If anything, they're at the tighter end of the range, and you get higher starting yields, as you mentioned, on the Treasury side. So really this debate, do end buyers, I think of buyers like us, we should really think in spread, but there's buyers that think in absolute yield, and that can keep markets more stable.
You think institutionally, which is your micromanage duration and that, for the mere mortals listening and watching this morning, do you just barbell, or do you just stay short, Paul Sweeney, short, and wait it out?
So I think there is some value from an overall portfolio perspective. I'm not even just talking fixed income, think broader. There is a value in having duration with the 10-year at 470. If we go into a risk-off market and equities fall because of some tariff news or anything else in the world, you're going to make money on duration. And so I do think there's value in long duration from a portfolio balancing perspective.
I got a question, and I get out the economic data right now. Folks, economic data this morning, of course, different on this Wednesday. We have economic data of Thursday. Tomorrow, the funeral of the former president, David Gura and Anne-Marie Horton providing coverage for that. Paul, I'm thunderstruck by claims at 201.
Yep, we have.
If it was 2,000 less, it would be 199.
Yeah, exactly right, Tom. So we had initial jobless claims just came across the tape at 201,000. The consensus
equities go green.
Equities go green. The consensus was for 215,000, so a little bit lighter than expectations. And last period, 211,000. So another data point as to the general health and/or stability of the labor market.
In ADP goes Goldman Sachs lower. It's a weaker number. 140 survey comes in at 122. That's where Jan Hatzius is at Goldman Sachs.
Yep, absolutely.
Did you see Greifeld had him yesterday?
I know.
Dr. Hatzius can come on with us. I mean,
Katie Greifeld, no problem. She's a player, obviously.
I just don't know what to say about that.
So what do we do here? A Trump administration, a lot of folks on Wall Street, if you talk to M&A bankers, M&A lawyers, deregulation, I can get deals done now, the animal spirits. Is that something you guys think about?
Yes, look, it is. I'm not an M&A banker, an M&A lawyer, but I think when I talk with our equity colleagues, the financial sector can be an attractive place to invest because of all those reasons. Capital markets and animal spirits, good for investment banks that are making deal-related fees, so good potentially for those stocks, and obviously with Michael Barr stepping down from the head of supervision role at the Fed on Monday, just kind of more impetus behind the deregulation of the financial sector, which is likely good for security, for financially related securities.
Two items here. Michael Barr of the Federal Reserve System is not related to the Michael Barr of the Detroit Lions and Bloomberg surveillance. Eric Stein, I know you're not on speaking terms with Barbara Reinhardt, but she has been brilliant on participating in the equity market. How do you dovetail yields higher, stocks resilient? That's not in Febosi.
Yes, well, I'd say we're on great speaking terms because we're getting lunch. Barbara and I are getting lunch later
McDonald's?
today.
Really? Voya, you should see what they do at Voya.
No, I know. They go big.
I don't know where we're going, but it's not.
Shea
it's not
Balloon,
McDonald's.
63rd Street. Go to Shea Balloon.
We'll go there. But yes, it's been the equity market has been, phenomenal 2-year run in the equity markets, and different parts of it, more the concentration issues in the equity market. Small cap thought they were having a really good end to the year and then crashed down a little bit at the end, but it's been pretty remarkable. I think it's, beginning this time last year, if I was here this time last year, you'd be asking me, when are we going to have a recession? When's the recession hitting? And that we all got it wrong in the equity markets.
Barbara Reinhardt got it right.
She got it right.
You didn't, but Reinhardt got it right.
No, Barbara had a phenomenal year. Our multi-asset team, the multi-asset team that Barbara leads, had a fantastic year delivering for clients.
Did they pop 20% plus?
Depends on the strategy, but they had a great year. Yeah, they had a great year.
Barbara Reinhardt and Eric Stein, they're over at Voya. I can't say enough about it. Don't be a stranger. I know, for you to come into the studio today in this cold. Thank you so much. Eric Stein, CIO Fixed Income at Voya. Well, Paul, do we get like a 5-minute break here at some point from the news flow?
No, and we come in tomorrow. Even though the equity markets are closed, we're coming in tomorrow.
We're coming in tomorrow. Thanks for bringing that up. Here's what we're going to do. Tomorrow, we're going to do a regular show where the market's not open. We will have a bunch of selected guests on where Jimmy Carter fits into modern American history. And then we'll have full coverage, I believe, at 9 a.m. with Emery Horton and David Gura, and then on to the Balance of Power people at 12 noon as well. Futures, red and green, around -6. In 20 minutes, a report on the Los Angeles fires with Rob Carolyn. Across the nation, Bloomberg surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Little movement in futures, and this is as traders assess whether yesterday's sell-off in U.S. Treasuries and stocks was a little bit overblown. Right now, NASDAQ futures down about 27 points, Dow futures down 7, S&P futures down about 4. We have the 2-year yield at 4.28%. That's little change, and the yield on the 10-year 4.71%. That's up 2 basis points. To commodities, we have Brent crude $77 a barrel, WTI crude $74 a barrel. We have spot gold at $2,655 an ounce. Initial jobless claims out. Expectation was for 215,000. Only 201,000 applications were filed last week. That's the lowest since February. We have more data coming out today. Wholesale inventories, consumer credit, and we can't forget minutes from the Fed's most recent policy meeting. Shares of Shell, they're down 3% this morning. This is after it warned of significantly lower earnings in its gas division. It also cut production guidance across its oil and gas units. Then meanwhile, ExxonMobil expects falling oil prices to drag on fourth quarter earnings. Higher gas prices will provide a boost. ExxonMobil off nearly 1%. And shares of Albertsons, they were up about 3.5%, now up about 1.5%, posted stronger earnings. And this came just a few weeks after its collapse of the $20 billion sale to Kroger. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Greatly appreciated. Rob Carolyn on the LA fires and the Santa Ana winds. We're going to do that in 20 minutes. Got a huge response when he was on an hour ago, and I can't say enough how serious this is. This is not the normal fires out west. We're honored to have Rob Carolyn with us. We're efforting a number of people on the president-elect's taking a legal case to the Supreme Court. Crazy morning with economic data. Paul, the data came in tepid, like not a panic about higher jobs. and yields moved here. I mean, I got a little bit of green. I mean, the 30-year bond, my eyes aren't playing with me, 4.95%.
Yeah, we're on that 5% watch, Tom.
Yeah.
Ira Jersey, Bloomberg Intelligence says,
What's he say?
that 10-year Treasury, if it gets above 4.7%, you got to be on a 5% watch on that one. That's
and you
the
nailed
technical.
it yesterday. You asked him about Aston Villa, and you sounded almost like you knew what you were talking about.
I knew what I was talking about. Exactly.
You nailed it.
I know.
Did Alex Steele brief you on that? Is that how that works?
Yeah, exactly.
Right.
That's how it works.
Joining us now, we're going to get to the equity market. He's got a really terse single sentence in his note. Dean Kernot, a huge supporter of the effort here. This is on the four cross moments, the dynamics of the market, particularly the equity market. Dean Kernot is with Macro Risk Advisors. We love when people bring their offspring in. They're usually cute, like 3-year-olds or 7-year-olds in that. You've got an older offspring coming in. Is he going to follow the heritage into quantitative finance, or is he running away from what Dad does?
I'm certainly trying, and with all the drop-offs I afforded him at school, Bloomberg surveillance was on each and every time, so he got a heavy dosage of Tom Keene.
I got a wonderful note. The guy driving around in New York this morning in a Rivian, inflicting this on his 7-year-old and his 5-year-old. It's child abuse, isn't it?
It's entertainment, and I think it's pretty interesting stuff. Well,
thanks for bringing in the offspring. He was well-mannered, unlike Afterthought.
Yeah.
This market is not well-mannered. There's a single Dean Curtin sentence. It won't last. What won't last?
Yeah, I think one of the risks that's staring us in the face is the lack of correlation among stocks. And I think it's a profoundly underpriced and underappreciated risk. And what I mean by that is, let's look at yesterday. NVIDIA's down 6%. The two other $3 trillion companies, Microsoft and Apple, are just down 1%. If we go back 25 years ago, so it's really this time in 2000 where the tech bubble is reaching its apex, and it's soon to unwind in the first quarter of 2000. But if I look at the bellwethers then, I look at Cisco, Microsoft, and Intel, and I look at big moves in Microsoft, always joined by a significant move in Intel and Cisco as well. So lots more co-movement. And I think that this lack of correlation especially among the super caps in tech, is dampening realized volatility in the QQQ, in the S&P, in a way that's we're going to be caught off guard at some point, because at some point these stocks are going to prove to be highly correlated at the same time that they become more volatile, and that's the double whammy that people always miss from a diversification standpoint.
I love your notes because I'm never really sure what I'm reading, but you're in here to explain it to us. Buy the umbrella before it starts raining. What do you mean by that?
Yeah, exactly. So, if you're walking around and the skies are sunny and blue and the umbrella salesman is trying to sell you his goods, it's a buyer's market, right? It starts to pour, and suddenly that umbrella salesman has got some pricing power. And that's the same thing with derivatives. Everybody wants to own volatility. They want to own left tail protection when the markets become volatile, and of course the cost goes up because there's a rush for demand. And right now we're sitting, although it might be in transition, we're sitting in relatively quiet times. There's not too much to say about realized volatility, again, at the index level because of this low correlation. And so, yeah, VIX is up here, it's 16 to 20, that range. It's higher than it was, but you can still put protection on at a very affordable cost. So you're buying the umbrella before it's raining.
Is there a new VIX? I mean, we're 1 year further on from the pandemic. We all have tattooed to our head our idea of where a bull market VIX is. Where's the new bull market VIX?
Yeah, there's a couple of interesting dynamics. And I think, first and foremost, the VIX is just going to track realized volatility in the S&P. The marginal price setter of the VIX is this volatility expert who is trading the daily fluctuations. Without a lot of fluctuations, you're going to have a VIX that settles in that kind of 15 to 20 range, very different than the pandemic. Realized volatility in the S&P was 80, VIX got to 80. So those are very related. The other thing that's just so fascinating is that all of the heavy lifting in terms of the movements in the S&P are being done by the stocks themselves. So your trillion-dollar companies, you've got Tesla, you've got Broadcom, you've got NVIDIA. These are 40 to 50 vol stocks. That's not usual. That's a very unusual dynamic where the stocks themselves are volatile. The other thing, Tom, I just wanted to point out is it may be too early to say, but August 5th and December 18th. So August 5th was this giant move in the VIX on a 3% down move in the S&P. It was the yen was rallying a lot, and so stuff happened overnight. And then December 18th was the Powell presser that kind of went wrong. S&P also fell 3%. The VIX skyrocketed. That doesn't make me feel very comfortable. And the VIX skyrockets for one and only one reason. It's because the option market that determines the VIX, the S&P options market, it broke down in terms of its liquidity. That's just not a healthy sign for the insurance market, the insurance product that everybody needs to protect their portfolios. For it to become that illiquid on just a 3% down move, that's telling to me.
We got to run. Did you inflict on your son kurtosis at the dining room table?
I'm working on it.
Okay,
Each and every day.
You got to get out the cross moments.
It's a long haul, but we're working on it.
I'm sure. Does he need a haircut? Probably he's leptokurtotic haircut.
Solid.
We'll see. Dean Kernett, thank you so much. Thanks for bringing in the offspring this morning. Mr. Kernett is with Macro Risk Advisors. Quickly to the news with our news in New York City, Michael Barr.
Tom, Paul, Lisa, California firefighters battled wind-whipped wildfires that tore across the Los Angeles area, destroying homes, clogging roadways, as tens of thousands fled and straining resources as officials prepared for the situation to worsen. Let's get the update now from Bloomberg's John Tucker.
Michael, 30,000 people were forced to evacuate neighborhoods in Los Angeles.
I'm so scared. My family, everybody left already, so I'm just here. But just, trying to be calm.
On Sunset Boulevard, drivers were forced to abandon their cars after getting stuck in traffic trying to evacuate the fire zone. A fire department bulldozer had to push dozens of abandoned vehicles out of the way. Fire Captain Sheila Kelleher.
That is a challenge when you wait too long to get out. People get stuck and there's no getting around, so they just had to leave their cars and go.
The Palisades fires at almost 3,000 acres, while two other blazes flared up overnight. All are uncontained. A wildfire is threatening Santa Monica and has prompted mandatory evacuation orders in parts of that city. The fires are whipped by winds with some isolated gusts that could reach 100 miles an hour. Nearly 220,000 customers are without power in Los Angeles. I'm John Tucker, Bloomberg Radio.
Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Thanks so much, Michael. Appreciate it. David Gura with Gary Gensler. Cy, give me a time on that, the 11-ish.
That's
my
noon.
head's spinning. Noon.
Yep.
Noon. Gensler and David Gura, and also part of the Big Take podcast, and we heard it from Eric. ETFs, I guess, flows are back into BitDog.
Yeah, absolutely. I'm just looking at Bitcoin here. I mean, it's been really volatile the last couple of days. We're down about 1.3% here, 95,000. We were, just up at 100,000 yesterday. So kind of all over the place here. But still a big run up.
Stay with us. A report on the LA fires. We'll do that in about 11 minutes. Bloomberg's surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Most depressing part of my holiday was going back and forth with Joe Weisenthal, both of us dying to get new guitars I did not. Did you get a new guitar?
Not get a
over
new.
the seasons?
I don't need it. I'm actually at a point where like I'm having a hard time justifying new guitars. Is that an embarrassment?
How many guitars do you have?
I mean, I only have like 3 or 4, but I don't know. I think I might. Maybe I'll sell one and get another one.
Yeah, do that. Upgrade.
Yeah. All right. I'm going to do an upgrade.
We'll do that. We don't have enough time here. We got to get to this. You've done a phenomenal effort on Odd Lots with Tracy Alloway about what everybody's talking about. Paul's been leading the way on this. OMG, is it Y2K?
Oh, yeah.
You did Colette Shade, is it?
Yeah, Colette Shade. She has a great new book. She's a great writer. Everyone should check it out. And you know what? It really struck a nerve for me because, you know, these days you see sentiment in the toilet and people are pessimistic and grim every day. But it wasn't always like that. And you know, around late 90s, early 2000s particular, it was an age of people were just sort of optimistic and we thought the future was going to be really good. Very recent in American history. And so we had this very fun conversation talking about sort of the aesthetics of that time and what sort of society looked like when there was this sort of, I guess maybe mass exuberance or irrational exuberance in the words of Ellen Greenspan.
Well, we had the 80s.
Yeah.
The 80s were good. We ripped it in the 80s. 90s were good too. So I don't know. I mean, it seems like now AI, a lot of folks are likening AI maybe even on a grander scale to the promise of the internet.
Totally.
Technology.
No, and it could be like in terms of like a productivity boost for the economy and the opportunity to do more with less. Very exciting. You know, AI also cuts the other way because there's all this anxiety, right? There's anxiety about, you know, I think like in the 90s, obviously there was the excitement about the internet, and we were also in this period sort of between the end of the Cold War and 9/11, where it also just felt like
great point.
History had sort of taken a break. I think I've seen it referred to as the sort of vacation from history, so to speak. And then 9/11 happened, and it was this sort of extremely rude awakening. But there was this period where it's like, oh, we're going to have peace, and all the big questions about politics and economics have now been settled, and prosperity. And it was an interesting time for that reason, too.
What do you hope to accomplish for Odd Lots this year? You guys have been on this huge roll. What's the new theme? They got like 5 interns.
I don't know. Yeah. So I think that in 2025 and the start of the new administration, there are going to be many really big stories because there are so many, I don't know if I would say contradictions, but constraints, right? And so people want inflation to come down. But at the same time, obviously there's talk of tariffs. Immigration politics is going to be an interesting constraint. How do you get the housing market moving again? How do you induce housing market affordability? That's going to be a really interesting question. So how do we solve these sort of fundamental issues of resource constraints? Do we want to have an aggressive upgrade of our military? Fundamental resource constraints. Interesting story.
Talk about upgrade. You got Hope Dunbar out with Light Sweet Crude here at the end of the month.
January 29th.
It's 11th Street in Manhattan?
11th Street Bar, Manhattan. Everyone is invited.
You come back to New York for January 29th.
Everyone come back to New York for January 29th. Light, Sweet, Crude, country music. It's a free show, so I hope every listener comes out.
It's like with Hope Dunbar.
Yeah,
is this
she's
the kind
great.
of thing where the record executives show up with leather jackets?
I want to have that moment where someone misses their flight and they're at the bar and they're like drinking and they're like, and they get on the phone. It's like, oh, I stayed overnight in New York. Listen to this band I heard at the bar.
We got a sign up. Call Clive.
They have the hot new sound. That's what I'm dreaming of.
Show notice, Light Sweet Crude with Hope Dunbar, January 29. They're out in the Midwest somewhere. It's tough. I mean, you know, the winter time.
It's winter.
You did the tour. They did last year, Light Sweet Crude did the tour around Lake Ontario.
Yep.
You go up to Montreal, and you go around through Buffalo.
Yep.
And
big
then
markets.
you freeze.
Big markets.
I mean, you know, it's big markets. Odd Lots, we'll have that. Speaking of which, are you playing Led Zeppelin?
Should we be doing a cover?
You got to. I mean,
send in a song for us to learn.
Yeah, Liz Ann Saunders is on today, which means we have to play Led Zeppelin. We're going to do it right now. Joe Weisenthal, Odd Lots, thank you.
is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, and Lisa Mateo. A really interesting day across American news. Eric Larson of Bloomberg will join us in a moment. The president-elect will approach the Supreme Court on a legal matter. We'll get a brief on that here in a bit. Huge response to Rob Carolyn earlier this morning on these horrific fires. He will join us here in moments. And Dr. Coronado, Julia Coronado, coming on after Richard Clarida on your fractured monetary policy. Let's get right to it on YouTube. Subscribe to Bloomberg Podcast, growing each and every day. That's the best way to help Paul Sweeney and me. There's no question about that. From the Interactive Brokers studio, our Bloomberg Business Flash. Who else? Lisa Mateo.
You got that right. We have little movement in futures this morning. This is after the NASDAQ 100 logged its worst day in weeks. We'll start with NASDAQ futures up about 22 points. Dow futures up 36. S&P futures up about 5. We have the 2-year yield at 4.26%, down 2 basis points. And the yield on the 10-year, 4.68%. And that is little change. Keep in mind, a Monday Cities Wealth Division says 10-year Treasury yields may test 5% again. And that's a level not seen since October of 2023. Over to currencies right now. The dollar rising for a second day. The Bloomberg Dollar Spot Index up about 0.3%. Also want to point out the British pound down 1% this morning, and that's at 123.64 against the dollar. Shares of Nvidia on the rebound up more than 1%. This is after dropping more than 6% yesterday. And then words from Jensen Huang. Well, they're having a positive and kind of negative effect on other companies. So we'll start with the positive. That would be Samsung. It shares up 3% in Hong Kong because Huang said he was confident the company's ability to resolve these technical issues, producing a new type of memory chip for AI systems. And then on the downside, you have quantum computing stocks falling because Huang hinted that a very useful quantum computer, are about 20 years away. So you have companies like quantum computing down 25%, D-Wave Quantum off 27%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thank you so much. Rob Carolyn was brilliant 90 minutes ago on the fires in L.A., and we're going to redux some of what we talked about before, but we guess we've got to move on. It is 0% contained, Paul, across 3 fires, and I'm watching the brilliant Los Angeles scanner out on Twitter with each and every police moment. It's literally the guy should be given he should be the one getting a Medal of Freedom from President Biden. He's saving lives at Los Angeles scanner. Rob, not a question for me, just you're the pro. How do you observe these fires?
This is a particularly dangerous situation, Tom, just because of the strength of the winds. I mean, we're looking at winds right now. This is real data coming in, gusting between 45 and 50 miles an hour at times in the Burbank area. And then you go west of Palmdale, California, and we're seeing gusts over 65 miles an hour, all of it out of the east, northeast, and northeast. So it's driving the fires over the mountains and down towards the Pacific. This is going to continue. What's causing these strong Santa Ana winds are a twofold weather system. Low pressure, which moved through the area and now is forming in the desert southwest. That caused the winds to pick up on Monday. And we've got a cold front dropping down out of the central part of the state attached to a low up in the Pacific Northwest. So we've got all sorts of wind across Southern California, the LA basin under wind advisories today.
Right.
We've got another tough 15 hours coming up, and then the wind should start to diminish by late tonight quite a bit.
What is the level of drought? If I'm driving up Route 5, up the highways, I noticed is it Sylmar, the Route 5, Interstate 5, Paul, was closed down. How dry is dry out there based on the Rob Carolyn history of drought in California?
Well, not as dry as it was 5 or 10 years ago because of the precipitation that California had the last 2, 3, 4 winters. They've done very well. This winter, they've gone back below normal. And as you and I, Tom, have discussed previously, we found in a study that we did for PG&E that in years after they've had normal or above normal precipitation, the fire danger is higher because the undergrowth has had a chance to grow the season before. It then dries out, and there's more tinder for the fires to work with in seasons after where they've had above normal precipitation like last year.
Rob, we've got to keep it short because of the president-elect of the United States. Rob Carolyn, you're more important than any president or president-elect. Thank you so much. We look forward to Mr. Carolyn's continued coverage. Again, these fires, the report I have, 0% contained. Michael Barr and John Tucker leading our coverage on Bloomberg Radio across the nation. From the nation, we go to the tip of Manhattan and over, I believe, to Brooklyn. It is the land of Patricia Hurtado and Eric Larson. They are our legal reporters. Eric, translate the effort of the president-elect to halt the legal action as he faces inauguration January 20th.
Right. So the big thing here is that Trump has a January 10th sentencing. That's Friday, in his hush money criminal case in which he was convicted last year in May. He has been fighting to stop this sentencing from going forward. And yesterday, a New York appellate court judge rejected his attempt to delay the sentencing, rejected his arguments about presidential immunity, just like the trial judge had earlier.
Right.
And now, late last night, Trump's lawyers filed a petition with the U.S. Supreme Court asking the nation's highest court to put a stay on this sentencing, to stop this sentencing from going forward while he continues his appeal in New York State Court.
What does that process look like? Is it 9 judges sitting at some podium deciding? Are they in a back room going back and forth? What is the Supreme Court process to get to January 10th?
Well, this is a request for a stay. So, first of all, they need to decide, how, if they're even going to hear this case. There's no guarantee that they're going to hear this case, which, by the way, could end up back before the Supreme Court again, more on the merits. But it was Justice Sonia Sotomayor who initially has weighed in and asked the Manhattan prosecutor, Alvin Bragg, asked his office to respond by Thursday. But the court is going to have to decide whether or not to first issue potentially a so-called administrative stay to pause the sentencing while they debate whether or not to put this longer-lasting stay in place. Because we only have 10 days to work with between the planned sentencing and Trump's inauguration. And Trump does not want this verdict hanging over him during his presidency.
Eric, what's the timing here? You mentioned only 10 days left. What's the timing?
Well, if there is a potential, I suppose, that the sentencing set for Friday could be delayed until next week. But Trump has to get this dealt with before he is inaugurated because once he is president, of course, this presidential immunity question that this is all about is much more concrete, and they can't have him go into court and be sentenced while he's president.
One final question, Eric.
Sure.
Are the attorneys assisting the president-elect people that have been brought into his administration, that have been nominated or just simply appointed? Are they the same people?
These are his appellate lawyer that he has used before. His name is John Sauer. This is the same appellate lawyer that he has used previously in his cases successfully before the Supreme Court. You'll recall that in one of his other criminal cases, the presidential immunity was greatly broadened to cover criminal charges in a case that was argued by this same lawyer, John Sauer. So he's in pretty good hands.
Eric, on short notice, thank you so much. Regards to Patricia Hurtado as well. Eric Larson and Patricia Hurtado looking at federal court at the southern tip of Manhattan this morning. My head is spinning. I got red and green in the screen, Paul. I got a VIX. VIX is up a stick, 18.66 on the VIX. Do we take anything from BitDog reversing?
It's just,
plummeting,
cratering off, 1%, but we're down to 95,000. We were at 100,000 just yesterday. So it's the volatility has always been there, Tom. A little bit of a risk-off field there.
Good morning on YouTube. I haven't even been out on the live chat. I'll do that right now as we introduce Julia Coronado with macro policy perspectives on our economy, on our monetary policy. Julia, are you confused in this January over our economy and over our Fed? Or is there a Dr. Coronado prescription 90 days forward?
Tom, I wouldn't say I'm confused, but I would say that like the Fed, we are all in a bit of wait and see. I think the Fed made a move in the second half of the year, last year, to adjust policy in response to a more balanced economy, progress on inflation. That all seems pretty well and good. I think most of the moves we're seeing in financial markets are not related to what the Fed is doing or is likely to do. The Fed is going to be the responder, not the actor in 2025. The actor will be the incoming Trump administration and the actions they take on tariffs, on global security, on immigration, and how that ripples into the macroeconomic backdrop. And, you know, we've got a lot of noise out there, and it's just really too early to draw strong conclusions.
Paul, do you read the minutes?
I do not.
I do not either.
I do not.
Lisa Mateo?
I do.
Lisa, do you read the minutes?
No, unfortunately.
Anybody in the control room read the Fed minutes?
Oh, please.
Ken Fellier, our global technical director. Dr. Coronado, save us. What do the minutes say?
Well, the minutes are going to give us the fulsome discussion. Now, remember, Tom, what did we hear in December? We saw a much bigger shift to incorporate the prospective Trump policies than we anticipated in December. Typically, the Fed would kind of wave their hands and kind of wait and see. I think that given the experience of the pandemic and given that all of the policies under consideration seem to point to upside risks to inflation. And the big surprise in December was that we saw a pretty broad shift upward in inflation projections, not for 2024, but for 2025. And that's a whole year away. They're projecting Q4 of 25. So that was kind of a interesting and somewhat unexpected hawkish shift. And so we're looking to the minutes to help shed light on that. How much of this was just reflected that inflation's been a little bit sticky in the data of late? How much of this is actually building in some tariff and immigration impacts into inflation projections? And what Powell told us, what Chair Powell told us at the press conference was, it's a little of both. But it should be a pretty interesting minutes, at least by the standards of this nerd. It is likely to be a more interesting set of minutes because it was a really unexpected shift at a very unusual inflection point. So we'll get some nuance as to what policymakers were thinking.
Julia, this week we're getting some more data on the labor market today. Initial jobless claims came in a little bit better than expected. But of course, tomorrow's the change in non-farm payrolls. Again, the consensus is 163,000, which would be down from the prior month. What's your view of the U.S. labor market these days?
The U.S. labor market has been on a cooling trend. It cooled in 2024. And it cooled. It's still very healthy and robust and plenty enough to drive growth. But the base of hiring has narrowed to just a few sectors. And most segments of the private sector are in a very cautious stance. The exceptions being the education and health, private education and healthcare, which continues to just hire in very large numbers. But whether you look at tech or finance or professional services, there's just a lot of caution. So what we're seeing is that we still have a high level of employment. The unemployment rate is low, but it's come up. And people who do lose their jobs are experiencing longer spells of unemployment. So it's a looser labor market. It's more balanced. It's a little cooler, a lot cooler than it had been in prior years. And so the Fed's judgment, and I think I completely agree with this, there is no inflationary pressure coming out of this labor market. Their policy restriction may not have tamed the stock market, but it's definitely brought the labor market into better balance and yielded progress on inflation. So I think we're in a good place, but it's a sort of more fragile equilibrium in the sense that the closer you are to a tipping point, the more some bad news could send you into a worse equilibrium. So the unemployment rate's been creeping higher. That's what I'm going to be looking for tomorrow. Does the unemployment rate hold? Does it round higher? Does it come back down? Are we kind of in a stable zone at a looser, more balanced state, or are we on an ongoing cooling trend? The latter would require more action from the Fed to stabilize things, whereas if we're already stabilizing, the Fed will have the luxury of standing pat while it assesses fiscal policy.
And I should correct, the non-farm payrolls come out Friday, not tomorrow.
Friday.
Yeah, exactly.
Not tomorrow.
No,
I had it spinning.
Yeah, I know. It's all
I've
over.
made the air like 3 times.
Exactly. I have to come up for air. Julia, given that backdrop, how do you think the Fed views the U.S. consumer here?
You know, what they've told us, and we can see this across a range of data, is that the U.S. consumer GDP growth, consumption still quite robust, but it's increasingly driven by a unequal set of consumers. So we know that we see loan delinquencies rising. We see the moderate, middle, and lower income consumer starting to struggle a bit. And, you know, just be a lot more budget conscious. We hear that in earnings reports, that consumers are far more price sensitive than they had been during the pandemic, much more budget conscious. Meanwhile, you know, these loose financial conditions, booming stock market, means that the higher income consumers are feeling pretty good about their position and are spending a little bit more freely.
Right.
So the aggregate numbers look quite healthy. Underneath the hood, you know, there's a growing divide. And the Fed kind of needs to pay attention to both of those things.
Julia, just Econ 101. Is the Fed restrictive now or accommodative?
I think they're restrictive. And I think Governor Waller kind of had a discussion about this morning in his talk in Paris. We have two things going on. We have the Fed keeping real interest rates fairly high, certainly by recent history's standards. Meanwhile, you have kind of a productivity boom or boomlet that is driving an AI innovation that's driving a lot of optimism in the stock market, and kind of fueling a bit of a higher run rate on GDP. But how do you gauge restrictiveness of monetary policy? If we have this productivity driver of equities, that's not reflective of monetary policy. So you look to the labor market, you look to inflation. Those are the Fed's dual mandates. Those confirm that policy is restrictive enough to produce progress on inflation and bring balance to the labor market. So I do think they're restrictive. How restrictive is still open for debate. How long this strong productivity environment persists is, you know, the $10 trillion question, right?
Okay, we got to leave it there. Dr. Coronado, thank you for the brief. Again, today we saw claims in ADP report. Tomorrow with the president's funeral, there'll be a dearth of economic data, and we go on to the jobs report on Friday. We'll go beneath the headline data at 8:30. Reading, Reed on the screen with our news in New York City. Michael Barr.
Thank you very much, Tom. Paul, Lisa. 3 major wildfires are burning uncontrolled through parts of the Los Angeles area, forcing tens of thousands to flee their homes and putting many buildings at risk, including the famed Getty Villa in Pacific Palisades. Wow. Cal Fire Battalion Chief Brent Pasqua says that the Hearst fire has never been like this with fire and wind.
I've seen a lot of Santa Ana fires, get up to 40, 50 mile an hour. But last night I saw light poles being blown over, utility poles being blown over just from the wind, not even from the fires.
Bloomberg meteorologist Rob Carolyn says the region could be in for several more days of this.
It should start to diminish this afternoon. I think they're done with it tonight. And then we've got another pulse of Santa Ana winds in Southern California Thursday into Friday.
Bloomberg's Rob Carolyn. Former President Jimmy Carter is lying in state at the U.S. Capitol. Yesterday, congressional leaders laid wreaths and recalled Carter's unlikely ascent from a small-town Georgia peanut farmer. Vice President Kamala Harris.
Throughout the world, Jimmy Carter elevated the role of human rights in America's foreign policy priorities and uplifted the importance of civil society in doing that work.
Carter will remain at the Capitol until tomorrow when he is transported to Washington National Cathedral for a state funeral. Pope Francis has named the first woman to head a major Vatican office. He is appointing Sister Simona Brambilla, an Italian nun, to become prefect of the Vatican department responsible for all the church's religious orders. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. We were talking about Twitter earlier, this raging debate, and it's wrapped around Elon Musk and all that. It's out on Twitter. It's not my thought. It's many other people. But at 1 a.m. this morning, I went at Los Angeles _ scan, SCAN.
Yep.
And I'm sure we're going to hear about it in the coming days. You'll be on, say, CNN or something like that. There's someone doing every police scan. It comes across, the little ones, the big ones, and that. And it's this new mesmerizing form of communication, Paul, that we have.
And just on your recommendation last hour, I've been looking at it, and it's got all the police reports say where the hot spots are, literally.
Literally house to house in Altadena.
Real time. And
the Getty Villa that Michael Barr just mentioned.
And if you know the streets and everything, it could be very helpful if you're out there.
Major shout out. I see the authorities using it. The fire people are watching Los Angeles _scan, SCAN. We thank Michael Barr for, of course, all of our news coverage. We're on YouTube. Subscribe to Bloomberg Podcasts. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Futures Report sponsored by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. All right, futures pretty much treading water. This is after more economic data out this morning. Words from Fed Governor Christopher Waller, who said he expects milder inflation and more rate cuts this year. So we'll start with the data. U.S. private sector hiring, wage growth slowed in December. Initial jobless claims fell 10,000 to 201,000. That's the lowest since February. Comes ahead of Friday's jobs report. We have more to come today, including wholesale inventories, consumer credit, and you can't forget the minutes from the Fed's latest policy meeting. All right, we have the NASDAQ futures down 26 points. Dow futures up about 2. S&P futures down about 3. The 2-year yield at 4.28%, down 1 basis point. The yield on the 10-year 4.70%, and that's up 1 basis point. Few stocks to watch. Drug discovery company Absci up 37%. The reason why? It's because chipmaker Advanced Micro Devices investing $20 million in the company. Other stocks to watch, Novo Nordisk. ADR is up nearly 3%. It expanded a deal with drug maker Valo Health. It's developed treatments for obesity, type 2 diabetes, and also cardiovascular disease. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Tom and Paul.
Hey, Lisa, thanks so much. Out on YouTube. Good morning on Bloomberg Radio. The imagery is absolutely historic. There is a sunrise across Los Angeles, out to West LA towards the Pacific and the Palisades, over to the San Gabriel Mountains in Altadena, and I'm going to say 3 fires, if not more. Paul, these movies are like something if Spielberg had to make a movie.
Yeah. And it's, I mean, they're just right, you know, you could just see the flames crossing across neighborhoods and houses.
Interstates closing down as well.
Yeah, exactly.
And almost house to house.
Yeah, exactly. Yeah. Actor James Woods is on Twitter saying, you know, they had to evacuate in his whole neighborhood. Yeah. They had to evacuate the elementary schools and all of that type of thing. So some very tough images.
Further coverage this morning from our Los Angeles News Bureau, from Rob Carolyn, of course, here on the Bloomberg Radio Properties and YouTube as well. This is maybe the most important interview of an absolutely nuts 2025, because she was way out front on this. Gina Martin Adams is running equity coverage at Bloomberg, and ages ago, you put a little shade on a double-digit earnings growth. You said, well, it's 11, 12, 14%, but. What's
Yeah.
the quality of the but?
Yeah.
1.825.
Yeah, I think this is a big sea change for us going into 2025. Unlike the last 2 years, in which consensus expectations embedded in equity market prices were extremely low. The equity market was anticipating basically no earnings growth coming into 2023, very low-digit earnings growth coming into 2024. The implied expectation in prices right now is for greater than 20% earnings growth to emerge in 2025. Wow. That is very, very rare in the S&P 500 history of earnings growth. We very rarely get 20% earnings growth unless we're bouncing out of a recession. Could we get to 20% earnings growth? Only if we have a massive reacceleration in growth and inflation. And that may happen, but it seems kind of unlikely. And that, I think, is a very big difference for 2025 relative to the last 2 years. As you know, coming into the last 2 years, we were pretty optimistic.
Yep.
Expectations were very low. That's different this year.
What does that suggest for the market performance? Is it a sideways market? Does it set us up for a big correction? How do you think about that?
It's a combination, I think. Sideways for a full year is highly unlikely. Okay. You can consolidate for a while. You're subject to greater degrees of risk, certainly subject to misses. When companies miss, they get punished a lot more in an environment where expectations are high. Critical companies, when they miss, can topple the entire market over. Yep. You're subject more to volatility and interest rates, which is, I think, exactly what's driving the market right now, by the way. This is not really a market that's adjusting earnings expectations. This is a market that's adjusting to new Fed policy right now, and that's what's created the sideways price action since early December. So you're just subject to more risk. You're subject to more volatility. Incidentally, the first year of a presidential cycle is notoriously volatile as well. The most unlikely outcome for this year is an average return.
But will corporations adapt?
Oh, yeah, of course. Corporations always adapt. They will adapt. Corporations will probably put
adapting.
up. What's
They're back
interesting,
to 5 days in the office.
Yeah.
They're catching up with Gina Martin Adams, who has a clan working 7 days a week.
What's really interesting about corporations is they will probably put up near double-digit earnings growth this year. So we will have positive earnings growth. We will have consistent acceleration in earnings growth outside of tech and communications. We will have cash flow. We don't think, for instance, we're headed into some sort of draconian growth slump or recessionary environment. But it's a different kind of landscape, particularly with respect to sentiment going into 2025 than it has been for the last couple of years. And there's also a concentration of risks that we should probably consider.
Gina Martin Adams with us, and we will continue with the head of our equity coverage here at Bloomberg Intelligence. We need to get the markets open again. The markets close tomorrow for the funeral of President Carter. I got red and green on the screen. Slide into it. Lisa Mateo, she's driven the VIX over 18. Good morning, Lisa.
Good morning. Yeah, before we get things started, too, we've also had a slew of economic data on tap to boot. We'll start with the S&P 500 right now. Little changed right now, down about 1 point at 5,907. We go to the Dow. That's little changed, up about 8 points at 42,528. And the NASDAQ right now, that's down about 0.1%, 21 points at 19,468. We head over to the two-year yield, 4.28%. That's little change. And the yield on the 10-year, 4.71%. And that's up 2 basis points. Checking with NYMEX crude, $74 a barrel. Brent crude, $77 a barrel. We also have the Bloomberg Dollar Spot Index, up about 0.5%. Want to point out the British pound down more than 1% at 123.33 against the dollar. Bitcoin down more than 1% at just over 95,000. At the open, because it's been on a roller coaster ride, checking with shares of NVIDIA, they're up about 1%. That is your Bloomberg Opening Bell Report. Colin Tom.
Lisa Mateo, thank you so much. We continue with Gina Martin Adams, who has been sterling over time in saying you have to participate in the market. You have a value portfolio at Bloomberg Intelligence, a model portfolio follow. What does it speak to you right now?
Yeah. So our portfolio actually combines momentum, value, profitability, and low vol. The factor that really stands out to us right now is low volatility. Low volatility stocks, in particular, high profitability and low volatility stocks are historically still at reasonable valuations, uniquely. and also offer some shelter in an environment where you have higher volatility emerge on the market. So you're still getting the profitability, you're still getting high margin, high ROE, high ROA companies, but you're also getting lower volatility stocks. And I think that that's really key to navigating an environment where the market may not be just going up day after day after day, making brand new records every single week. In 2025, we might be headed to a more volatile environment. And I think you want to hug low vol in that kind of landscape.
What kind of sectors are screening well for you guys these days?
Yeah, sure. So on the sector spectrum, tech and communications were persistent leaders for our sector rotation model up until the middle of 2024. Something changed for those segments. That was earnings momentum is decelerating now. So those segments have just sequentially over the last couple of quarters continued to fall in our spectrum of sectors. They're down toward the middle, toward bottom of the scorecard at this point. What has popped up in its place is really interesting because it's a combination of defensives as well as cyclicals. It's not a clear call. Healthcare, industrials, and financials are the top 3 sectors in the scorecard right now. Certainly very prone to policy risk. Also somewhat very sensitive to monetary policy. We'll need to see the yield curve continuously become more upward sloping to support that financials call most likely. But nonetheless, those are the 3 sectors that are best positioned when we combine price momentum, earnings revisions, valuations, and earnings trends.
Gina Martin Adams, thank you so much.
Sure.
Greatly appreciate it.
My pleasure.
On Bloomberg Radio in Washington, in Boston, in New York, the imagery on YouTube. Ari, can you give me this house? It's not a set in Hollywood. It's not funny. We've never seen it before. An extraordinary image from California right now of a substantial residence under fire. And as Paul mentioned on Los Angeles Scanner, Paul, it's not 1 or 2 or 10 or 20 houses. It seems to be, I'm going to editorialize, hundreds of properties at risk.
Yeah, I've seen on that scanner, a couple of these fires are a couple thousand, 3,000 acres in size, and the winds. I mean, if you're trying to fight these fires, the winds are just really the challenge.
They're level 1 hurricane winds. A level 2 hurricane is 96 miles an hour. We're getting gusts up there and maybe a little bit under that. Rob Carolyn suggesting this could be a weather challenge moving south towards San Diego in the coming days. He says the, fancy weather talk about the Santa Ana winds as well. Our talk is red on the screen. We're up a stick on the VIX, 18.90, Paul. That's all you got to know.
Yeah, exactly. So we got just a little bit of a sell-off here in the market here, Tom. The S&P is off about 0.1%. Same for the Dow and the NASDAQ.
Neil Dutta out with Jeff DeGraff, Renaissance Macro, with a chart showing housing appetite. I think it was mortgages or something.
Oof.
Wow.
Yeah.
Lower.
Yeah, lower. So if you want to sell your house and buy a new one, that's a sticker shock.
A price adjustment right now. Please stay with us. The markets are open with the Dow -95. NASDAQ fighting for a green level as well. On YouTube, subscribe to Bloomberg Podcasts. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, Wall Street did get some relief. This is after Fed Governor Christopher Waller said he thinks inflation will continue to cool toward the central bank's 2% target. But now stocks really just wavering back and forth between red and the green. Right now in the red, NASDAQ down 0.3%, 62 points. Dow down 0.2%, 97 points. And S&P 500 down 0.2% or 13 points. The two-year yield 4.28%, down 1 basis point. The yield on the 10-year 4.70%, and that's up 1 basis point. To currencies, the Bloomberg Dollar Spot Index up about 0.5%. We have the Japanese yen weaker, euro weaker, down 0.4%. The British pound down more than 1% at 123.28 against the dollar. And we have Bitcoin down 1% at just over 95,000. Want to turn to earnings? Shares of Albertsons, they're down about 0.5%, posted strong earnings, and it came just a few weeks after the collapse of its $20 billion sale to Kroger. And finally, the nation's largest egg producer, Cal-Maine Foods, they're up more than 7%, and this is after stronger than expected quarterly profit. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. You say good morning across the nation. The sun rising on the Pacific coast into horrific fires that Paul Sweeney and I have never ever seen. These are images from the three fires, the Palisades over to Altadena and some of Pasadena and near Interstate 5 as well. A reported 1,400 firefighters working. You know, these people are brave, Paul. They just had in the horrific fire, it's a red truck, and the guy's up there with the water going on, but there's so much going on around. Embers,
firefighters,
fire, and all that. Really challenging. We'll continue to follow that. On the fires in the Bloomberg terminal, we have a really special function. Paul, you know more about this than I do. MAP Fire, M-A-P space F-I-R-E, go, which is like when you talk about where the ocean boats are and all that. I mean, it's a whole part of the Bloomberg terminal. That's out there. I don't know. Our group was channeling me. I think in the last 48 hours, we got to get Brent Schutte on. There's just no question about it. Chief Executive Officer at conservative Northwestern Mutual. Brent's a belt and suspenders guy. What's the level here, Brent, of belt and suspenders in the stock market for 2025?
Well, I think Paul, in the opening when he teased me coming on the show, talked about back-to-back returns of 20% plus in the market. And I think that's accurate, but it's been driven by a few stocks. And so if I look at the S&P 500, the percent of companies that actually outperform the index or percent of stocks is sub 30%. That's the second year in a row. And if I go back to 1973, which I'm fond of because that's my birth date, there's only a few other times we've been as narrow. 1998, 1999. I hope you all remember those time periods. Then 1980 and 1973. And so to me, those things have one thing in common. They're towards the end of an economic cycle or nearer to the end of an economic cycle. And I do think the economy and the markets rhyme. And it really comes back to what you opened up with when you talked about Neil Dutta and housing. Yes, overall economic growth has remained strong. The strong parts have been strong enough to keep up the weak parts like housing. And so I think we need more broadening in 2025. We need the economy to broaden back out, and we need the markets to broaden back out. And that's where I think people should be positioned for in 2025.
Dutta publishing moments ago at Renaissance Macro, Paul, let's keep it short, as Brent Schutte talks about this. Dutta, housing is simply not working.
Not working, especially, when you see these rates where they are, Tom. It's no surprise. So, Brent, what do you do for 2025? What are you telling your clients here? Maybe is it sector? Is it market cap size? Where do you think the best opportunities are after the past 2 years?
I mean, I mentioned the years 1998, 1999. I think after that, you saw the S&P equal weight, so the average stock to be better. There's always a broadening that happens afterwards. I think timing is always uncertain, and I don't think anyone who comes on your shows knows exactly when that timing is going to be. And I get the benefit of working for a company that's focused more on long term. That's where I think there's a broadening that's out there somewhere in the future. And I encourage people to stay positioned for broadening. Small and mid-cap stocks have underperformed the past couple of years, and they're as cheap as they were back in 1998, 1999 compared to the large cap counterparts. And so that's where I want people to stay diversified at a minimum and position more towards those areas. Because if they only invest in the S&P 500, the reality is 40% of what happens to your wealth is determined by 10 companies. And that's not something that I think is very prudent pushing forward.
Fixed income. I mean, 2-year Treasury, 4.27% here this morning, 4.3%. Stick with that type of fixed income security, or do you take some credit risk?
No, I think you stick more towards quality. I mean, certainly there are still risks that are out there. The economy looks fairly strong right now, but credit spreads are incredibly tight. And if you're invested in equities, you pick up a lot of that already. And so to me, you stay in higher quality. I mean, the 10-year Treasury is at 4.72%. Kind of talking about another thing that doesn't make a ton of sense is the equity risk premium. If you just do the simple earnings yield minus that, is negative. I know it was from 1980 to 2002, which I get to retort, but bond yield went from 16 to 4% there, which drug equity prices along with it. And so to me, that's where I think just the economy is a bit out of equilibrium and the market's out of equilibrium. And that's what I think 2025 is going to be more about sorting that out and how do we get back to something that makes more sense in an intermediate to longer term perspective.
Do we get dividend growth and share buybacks to the rescue?
Yeah, I think so. I mean, look, I think there's opportunities abound. You know, you mentioned being conservative. We manage money for individuals that have higher risk tolerances, lower risk tolerances. I think there's good news is that there are things that are cheap despite the overall market being relatively expensive. Unfortunately, no one wants to own those right now because they haven't done well, and that's where people kind of base their decisions upon. Momentum's a powerful variable until it ends, and that's where I don't want to try to time where that point is at what it ends or where it ends. I do believe at some point there's a broadening out there, and so I think all the different things that you've mentioned before, the factor that's worked the best, I think, in the past is earnings revisions. Perhaps people start paying more attention to earnings growth and outright PEs going forward. So I think there are different factors that will work in the future that haven't worked in the past.
Brent, too short a visit. Don't be a stranger this year. Brent Schutte with Northwestern Mutual. The Dow negative 150. The VIX now out over 18, up 1.21 points. We're above 19 and the VIX 19.03. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Across Los Angeles County, firefighters are dealing with high winds pushing raging wildfires. Cal Fire Battalion Chief Brent Pasqua near the Hearst fire says people who have not evacuated should think about it right now.
For the local residents that may be in the area that are thinking about evacuating, if it's a thought, I would say do it. The earlier, the better.
Homes are being destroyed in Malibu as people abandon cars amid traffic jams. Los Angeles County Fire Captain Sheila Kelleher visiting that area says conditions are just too difficult to manage.
Don't get caught in that situation. Get out when those warnings come, pack up, get ready to go. We have an app in Southern California called Genesis app, which is incredible because it gives you all the up-to-date current evacuations for your area.
Captain Kelleher spoke with CBS Mornings. President-elect Donald Trump asked the U.S. Supreme Court to intervene in his hush money criminal case to prevent his January 10th sentencing from going forward. We get more with Bloomberg's Eric Larson.
He has been fighting to stop this sentencing from going forward, and yesterday a New York appellate court judge rejected his attempt to delay the sentencing, rejected his arguments about presidential immunity, just like the trial judge had earlier. And now, late last night, Trump's lawyers filed a petition with the U.S. Supreme Court asking the nation's highest court to put a stay on this sentencing, to stop this sentencing from going forward while he continues his appeal in New York State Court.
Bloomberg's Eric Larson. Former President Jimmy Carter's casket arrived at the U.S. Capitol, where he will lie in state until Thursday. He will then be transported to Washington National Cathedral for a state funeral. Global news 24 hours a day, and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
You know, Michael, we got the new interns in. And we have one intern whose sole job is to look at any tape we use, and where I say right, cut it out. It's a high skill. And the new intern missed that. I mean, that's all there is to it.
But I like the right.
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 Yeah, exactly. Right. Where did it come from? On Wall Street, and Paul knows this, you're in a sell-side meeting on Wall Street. Nobody has time. You move it along. And when you say right, it's like, okay, I get it. Next.
Yeah.
That's like what Wall Street's. It is like Jeremy Irons sitting at the end of the table, moving his fingers up.
No,
and
it's
down.
actually nothing like that. That is the bane of my existence, cutting your tape.
It is. I mean,
it is.
I mean, you give it off.
John
to
Tucker
intern.
likes nice, clean tape answers.
Yes, you know. And instead, it's like we're going at Wall Street speed. We're trying to do that. We call it velocity. Here, Paul, what's your thought on the day? I'm exhausted.
I'm exhausted. There's news all around us. There's market news. There's non-market news. There's Supreme Court news, President-elect news, which we need to get used to that cadence once again. So there's a lot going on out there, and yet the markets are generally pretty resilient here this morning.
Yes, I agree totally. NASDAQ green, and then vacillating around, we'll say. We're out on YouTube. Subscribe to Bloomberg Podcast. That's the best way to help John Tucker, is subscribe to Bloomberg Podcast. Good morning.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene. We're going to get to the next hour, the Alex Steele Show with Paul Sweeney. But first, we need to get a brief from David Gura on an exit interview with Gary Gensler. Mr. Gura, I can assure you I was never in Philadelphia going down the river at Pennsylvania, sitting in the crew going, row, row. Gary Gensler fit in well at the University of Pennsylvania. He sat at the end of the boat and told people to get it going. What do we presume Mr. Gensler will do after his time at the SEC?
Well, it's certainly something I'm going to ask him, Tom. Of course, between his job running the CFTC and running the SEC, he went to MIT and spent a lot of time thinking about and writing about digital assets, including Bitcoin and other cryptocurrencies. Suppose there's a chance he does that again. He lives in Baltimore. Perhaps he'll opt to stay there. And you alluded to his undergraduate career at Wharton. Yes, the coxswain on the Penn crew team. After that, he opted to go to Wall Street and not to law school. So he has had a foot in that world, but it's been some time since he's been in the private sector. I will ask him, rest assured, what he plans to do next.
David, I think folks in the crypto community, 4 years ago felt like, all right, at least we have somebody in the SEC coming in, and Rob Gensler, who gets it, who just understands the technology. And that in and of itself should be helpful to the regulatory framework development for crypto. That didn't really happen. What happened, do you think?
No, the opposite happened, and I'm very curious to hear from him how much his thinking on digital assets and cryptocurrency evolved from when he left MIT to taking on this job. I mean, what he's really embraced here is the kind of muscular role that the SEC has, being able to police securities and using that kind of broad, long-standing definition of what securities are to maintain that he has that remit to do so. But you bring up sort of the change that's taken place here in terms of popular perception. He went from somebody who was looked at as someone who knows this world and knows it well to somebody who's been really widely vilified. And something I'm very keen to talk to him about is sort of what it's been like to be on the receiving end of all the vitriol and all the anger from that world, from investors more broadly, and sort of what that might portend for regulation and who might be a regulator going forward here. I'm interested in drawing kind of a contrast to what he faced when he was running the CFTC. Of course, that was right after the global financial crisis. Eager to hear sort of if the tone and the tenor is different from what it was back then.
How far is the distance from Gensler to the next SEC chairman?
That's a great question. I mean, Paul Atkins, of course, served at the commission before. He knows it well.
Yeah.
I think that an open question here remains, how muscular is the agenda under a Chairman Atkins going to be compared to Gary Gensler? His was active or muscular. It was certainly long. I think we're likely to see one that's smaller here, but Paul Atkins does come from the institution, has an appreciation for the work it does in terms of examinations and enforcement as well. I suspect he would want to preserve a lot of that authority. But of course, the overarching theme to Washington these days is what's going to get cut at all of these agencies. And it has been I can't remember the last time an SEC chairman went to Congress and said, I'm satisfied with the amount of money that I'm getting from Congress. So it would be, I think, kind of devastating to this institution if they had really severe cuts, Tom.
David, our special coverage tomorrow of the funeral of President Carter, you and Anne Marie Horton, I believe scheduled at 9 o'clock to do that. How are you preparing for that?
I've been reading Jonathan Alter's book about Jimmy Carter, which is kind of expounding upon a book that Jimmy Carter himself wrote when he was 90, reflecting on his life. And it's amazing to note kind of the historical resonance that we're seeing even today. We heard President-elect Trump talking about the Panama Canal yesterday in kind of disparaging terms. That was, of course, a signal achievement of the Carter presidency, getting that agreement with Panama so that Panama would control it, but the U.S. would have access to it in perpetuity. I look forward to all of the sort of somber pageantry that's going to take place tomorrow at the National Cathedral, as you say, Tom, starting around 9 o'clock Eastern Time.
David Gura, of course, with his leadership at the Big Tape, his conversation today with Gary Gensler exiting at the Securities and Exchange Commission. Paul, you're going to keep going here? Do you get a break? Can you take a little, like, 5 minutes?
Oh, yeah, I got a little bit of,
You got a little
thanks to
5
CBS
minutes.
News.
What a day. Thank you to our team from 1 a.m. this morning working. Special thanks to Rob Carolyn on the LA fires. Stay with Bloomberg Radio on YouTube.